is going on? You guys hear me? Make sure everything's good. Alrighty. What's going on, Damien? Glad you made it in. So there's a lot of things I'm going to go over. I'm gonna go over exactly the Discord, which most of you are in, but people in the future on YouTube will be able to watch, just so they can see what's going on in our community. So we have a lot going on in our community. We're going to make sure we focus in on what's important and make sure we stay focused on what's important, which is growing ourselves and our portfolios, right? Um, so we have the free Discord and we have the membership side of things. The free Discord is going to be most of it, and then the membership is where you get to now, instead of relying on other people to do the work for you, you now get to take it into your own hands and see what we see. Um, so the weekly bots is one thing. We get these weekly alerts. We just talked about how we got that alert on that rare earths that just got that government contract or investment into them. We got it on the 16th. Where is it? USAR or something like that. It's one of these somewhere in here. BBAI Cube is on the 16th. There it is. So we got this alert. It's currently 24. Probably Monday, it's going to be somewhere in the high 30s. It might even jump into the 40s. So if you are a full member, you will get the weekly alerts. We also have another analyst that does a lot of day trades and swing trade options that you will gain access to more by alerts, if you're more into the option game. So just a little bit more, and then you also get the indicator, which most of you guys are using inside of our community. So our membership, our initial membership to be the Founders Club, which will be anybody with a green name in the Discord, it's going to be limited to 100. Okay, so first 100 people that become the members will be locked into life for the Founders Club, and then the next membership will roll out, which will never be as good as the Founders Club. So it's better to take advantage of it early on, be an early adopter, and we appreciate the support. So that's the Discord. Okay, a lot of the breaking news are two Twitter accounts basically that I follow that post a lot of good news, which will be Yahoo Finance and the Wall Street Engine. And then follow another one for earnings information. So that way I don't need to update you guys, or you guys don't need to go looking for a lot of things. You guys can just look inside of here for any breaking news. They're pretty much spot on with the, like, maybe 5 minutes later. They're pretty good with posting. Earnings is really good, easy to follow. When earnings comes out, they post it. So pretty much everything in here you should have or need, as far as looking into the market. You shouldn't have to go trying to dig too far for the important stuff. And that's what we want. We want to try to create a nice central location. So that's the Discord. We got that out of the way. All right. Yay, best Discord. I appreciate you guys. So next, and we can talk about it, but inside of our announcements, I talked about what we're going to go over here today. Um, One was the Discord. Two, our indicator and kind of how I use it. Wheel strategy, which a lot of you show a lot of interest in, and which is awesome. It's not something that's super easy to teach over messaging, and that's why I want to do these live streams and talk to you guys so you guys can understand my thought process on everything, and how strategies work. It's more of a visual thing, not so much like reading a textbook. And I'll show you on Robinhood how I do it and everything like that. We'll go over the trend lines, which are really important to follow. How I specifically use the indicator in my strategy. Um, do I follow my strategy 100% of the time? No. But there is a base strategy, which is what you should follow. And I'll go over during certain times when I don't follow it. For example, I would say the most recent one was like ASTS and Rocket Lab. Typically at these levels, I still only want to trim. I want to keep my position. But as the market as a whole has gotten a little frothy, the I want to take those diamonds into a stronger consideration and just go ahead and sell out of my positions. I want to get to a cash position. So that's why I don't just like follow it every time. You got to understand your surrounding areas and how everything is kind of feeling. So we'll go over all that. um, so just gonna hop right into our indicator. Okay. I use the Master Elite, and this should be good for anyone with free trading view. You don't need the paid trading view, and that's the important stuff. Okay, that's why we made it this way. Try to combine as many indicators, I think 10 or 11 indicators into two. That way, anyone with a free trading view can use it. So we use the Chill Master Elite and the Chill Momentum Elite. Okay, those are the two indicators. So when you are on the WAP, so you go here, you can either join the free one or our Founders Club. Okay, once you're here, you can go to your TradingView Elite indicator. Okay, and claim these. Okay, all you do, type in your TradingView username. Okay, claim the indicators, refresh your TradingView. Okay, and then they should populate by typing in these names. Okay, but I use the Chill Master Elite, Chill Momentum Elite. Those are the two that I would use if you are on the free version of TradingView. If you have the paid version, you can use all of these if you want. But most of these, this one, so really this one and this one are both combined into the master, so you don't need them. And then our MACD, actually, the purple and orange lines, which you will see, is actually now combined into the momentum. So that's why I say you really only need these two. Stochastic you can use as an extra, okay? If you have any extra or need help with any videos, there's setting up your chart, how each indicator works individually. And then whenever I get a chance to make a video on how I use the indicator to make a trade, I'll post a video in there. So that way you guys can see when I click here, I think why I'm buying Archer and why I sold Rocket Labs. Okay, so you can see those. Also part of our membership, you'll have a spreadsheet for the wheel strategy. Important to use if you're doing the wheel strategy. I'll show you how to use it in this one. And then make sure if you are in the free Discord, you should only see the free Discord, but if you're in both of them, you'll see both of these. Make sure you claim your Founders Club. This is what will make you have a green name and see the other things in the Discord. Okay? So that's what I have. Let's go over the indicator to start. Okay. So what do I do with this indicator is initially I want to see on the higher time frame. And the reason I'm on ONDS is because we just did an ONDS trade, but I'm going to go over that one in a little bit. Okay. But I always want to start on a higher time frame. So some of these companies are very young, so there's not tons of data to go off of a monthly time frame, but you can go off the weekly time frame to kind of just see. I always want to see where the bigger picture is. Okay. What do I mean by bigger picture? Okay. Well, if we take a look here, this is our momentum, right? And we had this downtrend, and now we're heading back up into this uptrend. Okay. So bigger picture, I can see that we just finished a downtrend and now we're in an uptrend. Okay. So I always start with the higher time frames just to get an idea of where we are big picture. Okay. Our indicator helps us as far as finding momentum and making sure that a company is either undervalued or overvalued. Okay, because if a company is overvalued, you essentially don't want to get into the company, right? You don't want to pay a premium for it. Now, it doesn't mean that the company can't continue to run. It's just meaning that the risk reward just might not be there. Okay. So when you see these light pinks and there's color coding, so light green will be you're entering a buy zone. Let me go to the daily time frame. It'll be easier to see. Let me get a better chart. ASTS is pretty good. Yeah. So, and I'm going to take out these Bollinger Bands just while I show you guys the colors. And we'll take out the trend lines for now. Okay. So this is the base of it. This is the base of our indicator. Our indicator is based off a company being undervalued or overvalued and momentum shifting to the upside or to the downside. Okay, those are the two main things. So as we creep higher, it gets darker, or as far as like more red to orange to bright red. I don't think we've had a bright red. There's a bright red. So you'll see this. So color combos right here. So light green is you're entering into a buy zone. You have entered the add zone if you're in the yellow. Neon green, you are in the buy zone. You're not entering into the buy zone, you are in the buy zone. Okay. Gray is going to be the neutral zone. Okay, so you could, you know, you get any sort of diamond there saying downside, upside. To me, how I play them is I ignore them. I don't do anything with neutrals. Um, it's a zone where it's like you could trim, but you could also be buying in this area. Like it's nothing crazy. Um, so I don't really listen to them. Um, yeah, you'll see why. I can even show you a couple times on this one alone where here is your add, like a yellow diamond to like add to your position. Neutral, didn't listen. Neutral, didn't listen. Neutral, didn't listen. Neutral, didn't listen. Now we can listen to it, right? We're in the buy zone and we got a green diamond. Now we can go ahead and buy. Okay. So when I see neutral zones, I don't really listen to them. When I see them actually over a solid color, other than neutral, I'll listen to them. Same thing here. I wouldn't have added, right? Neutral. Now we can buy. Didn't listen. Now you can trim some. Now you can buy some. Okay. So momentum is the diamonds telling us we have a bearish momentum here. We have a bullish momentum to the upside here, bullish here. Okay. So diamonds are the momentum. The color coding is the action. Okay. And what do I mean by that? So if we are in the yellow zone, which is our add zone, we would then wait for our confirmation here, right? Green diamond. We would go ahead and say, let's add. We're going to add to our position. We're in the green zone here. Okay. What does that mean? Well, that is a buy zone. So what are we going to do? We're going to go ahead and buy. Okay. So based on the zone determines on the percentage of which you are going to buy something. Yep. And I'll go over the weekly and the daily. So, but the color coding is the action. So orange, we are in the trim zone. So therefore you would trim. We're in the trim zone again. So you go ahead and trim. Okay. And now you're going to add neutral, nothing, trim. Okay. Green is up to you. I can actually pull that up, but light green and light red for me is typically a covered call or cash secured put zone. Okay, because it's not super undervalued, but there is a good time to add. So it's like playing a little bit more to the safe side by doing a CSP, because if you got a little diamond here, right, you still have a little more downside to go on these light greens, potential downside. Um, so I do a CSP, which can protect me if it does dip lower to own the stock better. So I like to do CSPs. Again, neutral. If you trimmed on these neutrals, right, you missed the actual trim way up here and missed out from 83 to in the hundreds. So that's why I don't tend to listen to our neutral zone call outs. Okay. I just ignore them. If it's in a colored one, then I listen to it. All right. As far as weekly and daily goes, so I always view my chart weekly to start, just because I want to see the big picture. I want to see where is everything shifting, where's the bigger picture of momentum, because a lot of days or 2 hours, right, can show a lot of false pump fakes, whether falsely going up or down. Just depends on the news, right? Like last week was a big news like downturn on Monday, but by the end of Friday, right, we're up and we're good. So what does last week look like? Last week actually looks like it was very bullish. Yet you would think last week on a couple of the days were very bearish. You would have thought that, right? So that's why I look at the weekly to start. Now, if we are above this blue line, I will trade the daily time frame. Okay. If we are below the blue line, I will trade the weekly or the monthly. Now, when to trade which one? Okay. So if I was looking, and there was a stock I was looking at today, was COTY, COTY. Okay. It popped up on our little call outs. Okay. Now I'm looking at the stock, right? Now I see the call out is being made. So the hard part is the history, right? If you were on the weekly the whole time, yeah, you would have bought all these. But we weren't looking at COTY at that time. Now we're looking at COTY this time, right? So don't factor in like kind of the past as much, but when I see this, too many alerts happening on the weekly time frame, I then switch to the monthly. Okay? Because if I look at the monthly now and go bigger picture, let's look at the big picture, guys. Right? What do we see? Wow, this chart actually looks pretty good. Because what do we see? We see a bottom here. We're coming right back down to this bottom. We see this momentum is now shifting upwards, right? We have the MACD now curling and it is going up. And we're probably going to get a cross soon. So if I take a little arrow here for you guys, what do we see? We see that, okay? Same thing happened here, right? We had bullish. If we take a look right here, boom, right? Bullish. Now we're bullish here. So could this be a nice double bottom and then rounding out? Yes. So this is when I would look at a monthly time frame. When I see too many triggers happening on a weekly and not enough reversal action happening, I will then switch to a monthly time frame to see what that bigger picture looks like. That's why I usually will start on the monthly, and then if it's a really short company, like for example, Iren hasn't been around for very long, right? Okay, let's now go down to the weekly time frame. So, we have a company that's been around for, I think Cotty's been around since like 1904 is what it said on their, when I was researching them. I can go to the monthly. There's been plenty of months that this company has been in the market to use that information, right? So, but if I am below the blue line, I will be trading the weekly slash monthly. If I am above the blue line, I will be trading the daily. You can also do the 2 hour if you want. But the 2 hour is mainly still based on the daily. And what I mean by that is going to be, where's ASTS? Here's ASTS, right? We got into this trim section. Now I want to start looking at the 2 hour and start looking and seeing, okay, there's a sell, there's another sell, right? Now you want to start trying to take away more wins at a little bit more accurate time and not as much delayed as a daily time frame might give you. But that's when I would use the 2 hour. I don't solely trade off the 2 hour, but when I get into certain zones, when I want to start buying, maybe like we're entering into a buy zone, now let's start zooming in to the 2 hour. Okay, now we're getting towards this trim area. Okay, now let me zoom into the 2 hour so I get a little closer to getting an exit before a bigger drop happens, right? So that's when I use those extra time frames. Okay. Um, but daily is by far the heart of this whole trading indicator, daily time frame. I just want to see big pictures. I want to catch the bigger moves. I don't want to trade the little things. Um, so we also have, so that's what the colors are. Colors and diamonds. Colors are the company's value. Is it overvalued or undervalued? And the diamonds are confirmation of momentum, either shifting to the upside or to the downside. Okay. So we want to be buying in these green, yellow zones. Okay. Green, yellow zones. We want to be taking our wins in these red, pink zones. All right. Yeah. So the weekly doesn't tend to trigger too often above the blue line. But if it does, yeah, you're more than welcome to. It's the blue line essentially is a variation of a 200-day moving average on the daily time frame only. I don't let the moving average move because the strategy is solely for the most part ran off daily time frame, um, and then when it's below it, we have our workaround to go to the weekly. But I always want to know where that daily 200 basically variation moving average is. Um, but you will get less weekly alerts for sure above that one. And I think we just got one that was above the line. Was it? Yeah. So very rare though. So we have CleanSpark got one this week. Again, CleanSpark is tied to data centers and to Bitcoin. So Bitcoin will have a huge effect to CleanSpark, as well to Iren and the other ones. So when we saw dumping happen, data centers were going down. CleanSpark is behind the ball on data centers, but they can catch up. It takes a few contracts, and they'll be kind of up and running. Um, but yeah, it's very few times you do get a weekly above the blue line. Okay. CleanSpark has ran it twice. Here's the last time on the light green, yellow diamond. Could we get a little throwback moment and run the same game plan? It looks like it. We got targets. So yeah, but you'll get it far less as far as the weeklies above the blue line. Okay. Um, then we have labels on this indicator. And what do the labels? So I'll tell you the little secret basically. The labels are solely based off of RSI. Okay. I know a lot of you guys use your RSI as an indicator if you have the paid version. The color coding in the labels is essentially based off of an RSI, right? When something becomes undervalued, it's low RSI. It's probably a good time to buy. When something becomes overvalued, it's a high RSI. You should probably look to sell. Okay. Now, these trim and ads and buy, okay, those labels aren't telling you to specifically do the action on that day. What it's telling you is that the RSI has hit a specific trigger point where on ads, for example, or CSPs, you can do either one. Um, this is typically when buyers tend to step in. Okay. So look for buyers to step in, wait for it to get momentum, and then we'll get momentum and then it'll go up, right? So again, we're under the blue line. So bad example. Let me do this one. There we go. So you get an ad, buyers step in, we get the momentum diamond, and we go up. Okay. Here we go. We get a nice ad, CSP, momentum, we go up. Okay. Ad, don't do anything. Diamond, do something. Now you're good to go. Okay. So the labels are just telling you we hit a specific RSI number that triggers typically when people tend to step in to trim, add, sell, or buy. Okay. That's all they're telling you is that we've now hit that RSI moment where things, you should start paying attention. Some people might start to look to trim, people might start to look to sell. Just be ready. So same thing right here, right? We got trim, don't need to do anything. Another trim, don't need to do anything. Next day, you did get a momentum diamond. You can go ahead and trim. Another trim alert, another diamond, trim. Okay. Now, do you have to wait for the label to populate? No, it's just a nice warning that's telling you we've hit that moment where things could start happening. People might start taking action on their positions. Same thing, get a nice little trim alert. Sure enough, 2 days later, we get a nice little diamond confirmation that momentum, you should start looking to trim. Okay. Yeah, clean spark, let's go. Um, so we also have on here active trend lines and previous trend lines. So if we take a look, these are going to be automatically plotted for you no matter the chart you pull up. Now, they use specific pivot points. And what does that exactly mean? Okay. They're grabbing certain points that are very important here, here, which continued the line, um, that are very, I would say, adamant pivots, meaning that there's a lot of upside and a lot of downside. That is an important pivot to know, just because you can see the bigger picture of the trend. So now you know, okay, we're up here. My downside risk is pretty heavy, right? We could be seeing 74, right? You got some pretty significant downside. Now, this was the previous trend line, this lightly faded red one. Okay, you can see that it was trying to break it. It found support, then it broke down. It couldn't break it, still couldn't break it. And then when it finally did break it, so you can still see this is another support resistance line that you can use for your knowledge. So, yes, we could fall. Okay, we should see some support right here at this 90 mark. And if we lose that support, we will then drop down to our 70. Okay, so the previous trend lines, and if we lose this trend line, the drop is a little further down to 60. Okay, so that's what these trend lines are there for. They're not essentially there for anything as far as, I guess I use them mainly for risk reward, right? You can see that when we were down here and got this, we had a good support line, right? Boom, touched, boom, okay. And now we got a diamond confirmation. Go ahead, we're at the bottom of the trend line, buy it, okay? Neutral zone, don't care about those. Now we're kind of near the top. I should probably be looking to take our sell, and that's why we sold. We sold, last week. I think the downside is just too risky. So therefore, I'm going to get out of that. I'm going to list to the diamonds, and that's why I did a full exit. We hit the top. I don't want to really trim and hold this one again. I'm going to take the full win here, and then we'll re-enter if the moment comes, but we're going to wait. Okay. So the trend lines hopefully are straightforward. I can click on any of these charts here. Um, they will give you trend lines. If there's not a trend line to be made, it's not going to make the trend line. Okay. Maybe if we go down to a 2 hour time frame, right there, now the trend lines have moved based on the time frame that you're in. NP, we're at the top of the 2 hour trend line. Looks like we could see a rejection here pretty easily. Okay. 2 hour, right? It broke out. This was the 2 hour trend line. Here we found support on the previous trend line and bounced higher. If we go to the daily time frame, yep, consolidation broke, and we finally broke out. Okay, they move for you. You don't. It doesn't take a lot. Okay, and then you might say, "Cool, why aren't they using these points?" Well, the pivot points were not that important as much because there wasn't as big of a down and upside to each side of the the pivot points. So it's actually grabbing this. There was actually a good amount of up to here and a big down here. So this trend line is more important, which as you can see, EOSE is having a hard time breaking this trend line again. Because could be just a squeeze moment. This isn't the true trend line. So if you drew this trend line, you might be waiting a long time to get to that top and holding for longer than you need to. Okay. So that's why the trend lines use specific pivot points. It's just to grab the more consistent, like adamant trend line and not trying to grab the outlier trend lines. As we know, a lot of stocks will do some fake outs, and that's what I don't want to focus on. I want to focus on the big picture, consistency, where the bigger moves can happen. For example, one of them is at the bottom, ZVRA, that I'm pretty excited about, that I want to get into. But I think we could see just like on the daily time frame. But here's the weekly. We're under the blue. We got a weekly green. We have a good amount of upside. If you don't know this formation, it typically breaks out to the top. It does not usually break to the downside. So that's why I can see that. We're in the middle on the daily one. So could we see like a slight rejection? Because I can see this momentum was just trickling down. Yes. So I think we can get a good entry this week. But the weekly diamond came into play. I think there's a bigger upside. So we're going to look to be entering ZVRA next week. Hopefully a good dipping opportunity presents itself. So that's how I use the trend lines. I want to be buying those diamonds that are at the bottom of trend lines of these supports. Nice bottom diamond there, right? Even if it came back down, we'd still be in the green and retest it again. So I like buying those diamonds bottom trend lines. That's how I use the trend lines. All right. It automatically plots. So just don't fight them. If you want to plot more trend lines like this one, you could do this. You could grab this point and then you could, you see that point, draw. So maybe we come up, reject, boom, boom, right? I just want to see the big picture. I like the bottom trend line. We can go higher. Okay. What was the next? Oh, Bollinger Bands. That's going to get us more into the wheel strategy. So I want to focus before I get to Bollinger Bands to the bottom one. Okay. So the MACD, if you guys use the MACD on any other indicator, are these purple and orange lines. That's all it is. It's just the MACD lines. The same ones if I pull up the MACD, this one that we have, all it is these lines. Look at this crossed, this crossed. Crossed, it crossed. It's just the same thing as these MACD lines. So now I can see this one flip positive. Sure enough, it flipped positive, right? So that's what the purple lines are for, or the purple-orange lines. It's just a MACD, okay? So that's why I don't use the MACD, because I can see what the MACD is doing, whether or not it's over or under our zero line, okay? I don't need the histogram because we use a different momentum histogram. But if you like it MACD separate, you can totally use it. As far as what the histogram means and what the little bars mean, and you can change the colors if you want. I know one of the other members changed the colors, used red for this one, just so they can see the downside momentum. So it's up to you if you want to change it. But basically, blue is going to be your strong momentum. Okay. White, it's heading back towards the zero line. It's going back down. And if it's white on this side, it's going back up. So it's just whatever, going to the zero line. Okay. But strong momentum to the upside, started trickling down. Now we got the blue bar slightly higher than the white. So therefore momentum stepped in a little bit more. But we're still overall losing it. So you want to look at the overall trend that you are seeing. So I can see this one, right? We were trending up. Boom, 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 boom. And now we flip positive and we got the diamond. Diamonds tend to correlate fairly well with the histogram. Now, there are some bots out there that on our weekly and daily time frame will tell you a diamond appeared or some bullish momentum appeared. It's because it went positive. Doesn't always mean the diamond's going to trigger, but it will tell you that momentum flip positive, and I want it on your watch list just in case it is a company you are, watching. I want to make sure you're seeing those same alerts. Okay. Um, so let's go to daily time frame. So overall, too, you can see if you take a look at this histogram, and this is super easy. It almost makes charting way easier, um, because you can grab this like top point, like the highest point of momentum right here, and you can see that the overall trend is going down. Momentum is dying off as we get higher and higher and higher. Okay, that to me would be considered a bearish divergence. Okay, and divergences are these little green flags, green and red flags. Okay, so very important to pay attention to. And what is a divergence? Basically, the stock is going up, but the momentum is going down. It tends to be a signal that you need to. The divergence is typically the right one. Like, meaning that if it's a bearish divergence, that means a bearish moment is coming up. Okay. I can find a couple examples here for you. Here you go. Bearish divergence. And we got our little diamond, and sure enough, we went down because the stock was going up, yet momentum overall was shifting downwards. Boom, 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 boom. Okay. So that is bearish divergence. Now, if you get a green flag, that's going to be bullish divergence. So you got a bullish divergence here. Stock was going down. Momentum was now shifting upwards. Okay. Give it a minute. Get our diamond. And we're off to the races. Okay. So the flags are just telling you there's a divergence, meaning that momentum is going bearish, yet the price has been going up. So just be aware, right? That listen to your diamond coming soon, not neutral. Don't listen to your neutrals. But once you get this one, I would listen a little bit. So if you get a flag on the MACD, let me see if I can find an example. Because there's these ones that happen on the histogram or touching, but there's a few that happen. So if I have one, I gotta find one. Doesn't happen very often, but the MACD also can trigger a divergence. This one right here, and they're kind of tough to see, but overall there's a divergence. But as you can see, this one is pinned to the line. Let me just do this. This divergence is pinned to the line. This divergence is just sitting over the histogram, but you can see that this one is like pinned to the line. Okay, it's not going to be like this. It would sit here if it was pinned to the line, since this is not pinned to the line. But anyway, if you see a divergence pinned on the line like this, that means the MACD is showing a divergence. If it's just pinned like this, that means the momentum is showing a divergence. They both are momentum. That's why it doesn't matter a huge amount, but divergence is being found one way or another in a bearish way. And sure enough, there's the bearish way. Okay. That's everything as far as the indicator individual goes, besides the Bollinger Band. The Bollinger Band has a lot to do with our wheel strategy and selling covered calls, selling cash secured puts. And that's important. As far as strategy goes, though, with the indicator, I like to do it this way. ASTS is the perfect example because it gives me every single diamond possible. Okay. Not financial advice, just educational purposes of how I do things with the diamonds. Okay. Let me get a sip of water. I personally like to run it 25%, 10%. Okay. So once you determined the amount of capital that you want to invest into a company, you then run the strategy with a percentage. So for me, I base my percentages based off a diamond. So green diamond, okay, is 25% of the cash I have available. I buy. So if I was doing a $10,000, I had $10,000 left to put into my position, I would then do 25% of that 10 grand. So $2,500 I would buy worth of stock right here. Okay. Red diamonds are 25% trims of my remaining position. So if I have, you know, 1,000 shares, okay, I'm going to trim 250 shares right here. Okay. Now I have 750. So now I'm going to trim 25% of those shares I have of 750 shares. I'm going to trim there. We get back here. Based on these trims, I should have a good chunk of cash to now buy 25% of my position back at this price. Okay. Here's a neutral. Not going to do anything. Trim another 25% of your current position. Okay. Yellow diamond, I'm adding 10%. So whatever cash I have, if I have $1,000 and I get the 10% add, I'm gonna buy $100 worth of stock, right? If it's 10,000 cash, I have $1,000 I'm gonna buy of that stock. Okay. Now neutral, not doing anything. Neutral, not doing anything. Trim another 25% of that stock of whatever you have left. Okay. Again, 25% add. Okay. Up to you. You could do a covered call here, or you could do a trim, which would be a 10% trim because it's an orange diamond on a color. Guess what? You would get to add 25% back on this one. So it would be perfectly fine. Okay. Again, 10% trim, nothing on the neutral, 25% add, 10% trim, 25% add. So that's how I run the strategy. 10 and 25. Does that make sense? Any questions in the chat? Any scenarios? Let me know. This is all being recorded too, so you guys will be able to circle back to anything in this video and watch it back later. And now let's get ready. If you don't have any questions, I'm going to keep moving on, but I am looking at the chat. So if there's a question, once I get to a good spot for me to answer that question, I will do so. Okay. So I'm going to turn off fairly, for the most part, everything just so we can focus on the wheel strategy. Correct. Daily time frame, as long as we are above the blue line, is how I run it. And just know, guys, we're not going to time the top and we're not going to time the bottom. But if we get here and we didn't buy, I didn't buy at 36, but I bought at 39. And I didn't sell at 102, but I did sell, if worst case, you sold at the bottom at 80, right? Like, that's worst case if you sold it like that. But as you can see, the trend line hit and you would probably be looking to take some exits. So, but if you didn't, you're still going to capture a good chunk of that move. You didn't time the top or bottom, but you still captured 80% of the move, which is the important side of it. But yeah, daily time frame when we're above this blue line. If we are below that line, look at your weeklies, look at your monthlies. Okay, look at those two. Get a big picture. Okay. So wheel strategy. Okay. Strap in for this one. All right, guys. And when I'm gonna do it the best way I know how. And all you need is our Bollinger Bands. To help you. Okay. You can start implementing the other things into the strategy, but for me to go over everything, I'm just going to use the Bollinger Bands because it makes life a lot easier. Okay. How you want your Bollinger Bands to be is up to you. I just do white lines. Okay. That's all I do. Bollinger Bands. Okay. Yep. We sold at 117 on ASTS. It was beautiful. Great trade. Super happy. And I'm going to show you some trades on CSPs, and I will explain, because I know a question came up on why I did ONDS. Okay. Was it the most opportune time to do ONDS? No. Was it my whole position? No. So, and I'll explain it. But I want to talk about what the basics of the wheel strategy are. Like I said, you guys have a lot of questions about it, and it's a very useful strategy in your tool belt when you want to. I'll just go over the basics, and then I'll go over a little bit more. Um, the wheel strategy is a very simple strategy. Okay. Let me pull up our little educational classroom inside of the Discord here. Okay. Where's our wheel strategy? Right here. Oh, I didn't put the other thing in there. Let me pull it up. So the wheel strategy is a two-step process. It's a very simple two-step process. There's nothing else to it other than two steps. Okay. That's what makes it super fun. There you go. Okay. Step number one is a cash secured put. Okay. And a cash secured put is essentially saying, and I know everyone has ultimately said this in their investing career, is if a stock gets to a certain price, I'm going to buy it. Okay. If you haven't said that, then I don't know who you are. But ultimately that's what it is. If you said, for example, let's do one that's somewhat in range. I guess where's a hymns, right? I guess a lot of people want to buy hymns at what, 25, 26, right? Is that one? What's a stock that you guys want to buy at a certain price that is somewhat close but not close enough? Put it out there. Let me see in the chat. And I'll look at a few. Netflix. There we go. Perfect. Netflix is going to be a perfect one. There we go. Okay. So Netflix at 75. So if you wanted to buy Netflix at 75, okay, you can do that. Put your money where your mouth is, and I will buy Netflix at $75 if it is below 75, okay? And you can sign a contract and get paid for that while you wait for Netflix to do it. Okay? So let's take a look. So typical rules is I want for a cash secured put, I want it on the bottom of the band. Okay? Bottom of the band, we're there, right? And again, I'm probably going to be on the weekly, but anyway, we're there. We're at the bottom of the band. I want it to be a red day, and I want to be at a 30 delta. Those are the main three, okay? And you want to have to own the stock. You like that's number one. There's a few questions inside of our thing. One, do you want to own the stock? Is the stock at the bottom half of the Bollinger Band? Is the stock having a red day, or did the premiums go up? Okay, so if you answered yes to all three of those questions, okay, then you're ready to do a cash secured put. It's pretty much just straightforward like that. Okay, and again, all it is saying is if a stock got to the price you want, you would buy it. That's all I'm saying. So if we go here, okay, you can go to sell put, okay, and I like 30 days. 45 days is my max. Usually 2 weeks is my minimum. 30 days is a sweet spot. No more than 45 days though. Okay? So all I'm going to do is I'm going to go to February 20th. Let's go take a look. Can we get to 45 or 75? There it is. So right now it's a 6 delta, okay? That strike price is too far. I want the strike price to be about a 30 delta, okay? So for example here, right now a 30 delta is 83. So all it's saying is Netflix by February 20th has a 30% chance to get below 83. That's what it's telling me, okay? It's telling me to get to $75 by February 20th. Okay, it's a 6% chance. That's what the deltas tell me. Okay, ONDS is nowhere near the bottom of the band, so not doing ONDS. HIMS is definitely possible. But we could do it is sign a contract if you wanted to for 75. Now, the reason I wait for a 30 delta is you want your capital going to work for you to make enough, right? So, for example, if I did this one, I would have to put up 100 shares, or I'd have to sign a contract saying I'd buy 100 shares at $75. So I'd have to give them $7,500, but I'm only going to make a potential $21. Like, that doesn't work for me. Okay? It shouldn't work for you either. Like, you don't want that. Okay? So, if that was the case, let's just say time has moved forward. Okay? And you can always go out further date, but it's not going to be enough, I think, for that strike. Like, if I went to the max 40 days, 75, 10 delta. Still not 30 delta. I want a 30 delta. Okay? So, I will go to HIMS, for example, just so you can see. Trade, sell, put, or if you go to your builder, there is cash secured put button. February 20th. Can you sign a contract? 15 delta for 25. But here's like 27, like 27.30. So I would do this one. Okay, just roll with me here. If I wanted to buy HIMS for $27 a share, I could sign a contract right now saying I will buy HIMS for $27 on February 20th if the stock is below 27. If the stock is not below 27, you don't have to buy the stock. Okay? So, what does that look like? We're going to run this through. Okay? You have to have the amount of capital to buy the 100 shares. That's why it's called cash secured, because they are going to secure that cash that you said you would use to buy the stock, and they're going to set it aside. Just going to sit there. No one's touching it. No one's using it. Okay. They're going to set that aside. Now you have this contract saying, I will buy this stock. Okay. On February 20th, if the stock is not below 27, I just get to keep this 97 cents of premium that the other person, whoever signed the other contract to sign with you, will pay you this $97. They're the 97 cents a share times 100 shares, the $97. Okay. If the stock is below 27 on February 20th, you have to buy the stock for $27. Okay. But you already want to own the stock. You want to own the stock for 27, right? You already checked these boxes saying, I want to buy this stock and I'm happy owning the stock at $27. Okay. If it doesn't get there in that time frame, no problem. I still get to make money while I wait for this stock to try to get below my strike. Now, let's just say you sign this contract today. Tomorrow, the market dumps. Whatever it may be, whatever the reason may be, and the stock goes to 25. Okay, well, you could either sign another contract, keep this one, sign another one, dollar cost average down. 2, okay, you still have 25 days. It does not matter what the stock does between today and February 20th. The in-between dates have nothing to do with the contract. Okay. All that matters is on February 20th, where is the stock? Because if the stock on February 15th is at 25, and by February 19th, the stock is back to 29, you're not going to get the shares. You're just going to make your $100. Okay. All it's saying is, I will buy a stock. And how does it look in your actual account if you got these shares? This is how it'll populate. It'll say, if you did one contract, you'll have if you were to get assigned these shares on February 20th, the stock was $26.50. Okay. You're like, well, Colby, I just bought the stock for 27. Now I'm 50 cents in the hole. No, you're not. Okay. What you're actually going to own the stock for is 27 minus your 97 cents in premium. They will put 100 shares in your account at $26.03. So when I do these, I think, am I happy owning the stock for 27? Yes. Okay. Now, is the premium enough? Okay, that's 97. I would actually get to own the stock for 2603. Would I be happy owning HIMS at 2603 if I am assigned? Yes. Okay. If the answer is yes to all those questions that you ask yourself, if I'm willing or want to own this company and do I want to own it at 27? Okay. If I want to get a sign, if you wanted to break even and get out of, like, if you got assigned these shares and you're like, I really don't want to keep these shares anymore, if you sell it for 2603, that's your break even point. Okay. You don't make your premium, right? You just sold it for the same price you got at the discount and you just get to break even, move on from the stock. If you sell it back for 27, you get to make the 97 cents that a premium that you were initially going to get. Okay? It is by far the safest way to buy stock, um, and continuously get to manage your cash. Okay. Like right now, ONDS, I did a CSP. You guys were probably like, what the heck is he doing? The stock is nowhere near the buy zone. Okay. ONDS has a bright future ahead of it. Okay. I believe so. I believed it since we owned it initially at like $1.88 when we were buying it a couple months ago. Okay. Um, the upside is, I think, in the 20s. So we're halfway there. There's still a good chunk to go. But my mindset was the strike price minus the premium. Would I buy ONDS at that price? And the answer was yes. And I'll walk through that trade. Okay. Again, we're just on step one, just step one. All we're trying to do is buy a stock. That's all a cash secured put is. Name your price of which you want to own the stock for. And if it's below that strike, you'll get the shares. And if it's above that strike, you don't. You wouldn't have bought it anyway. It was above the strike, right? That's all it is. So here's ONDS. I did the $13 put and we did it for $1.95. Here's your ONDS break even. Okay. There are so many people buying the dip right now on ONDS that are trying to buy it in this low 12s mark. So I signed a contract saying on February 20th, I will buy the stock if it is below $13 on February 20th, and I will collect $1.95 in premium. Yeah. So now I'm going to get these ones for 1105, and then the other ones I did, which was this is a separate account. There's two accounts. I have them both in. The other one I did that Damien said in the chat is I did a $12 one for $1.35 or $1.36 premium, which that would be, as Damien said, 12 minus your $1.35 is going to put you at a $10.65 average. I'm okay buying ONDS at that price. Did I do my full position all in one? No. If it goes down further below my break even, that's what I wait for. I wait for the stock to go below my break even to be able to dollar cost average in. Right? Because why would I wait? Why would I dollar cost average in if it's still above where I'm currently going to get the stock for? Right? Like you can add a little bit, but I want my next average down. I want it to be a bigger chunk, so I tend to wait for it to at least get below the 11, like the next dollar, right? So that's all a CSP is. I'm saying I want to buy ONDS, but I don't want to buy it right this second, and I don't want to buy it for 12 either, right? I see it's 12. I'm willing to buy it if it stays below 13, but the premium is going to actually put me at 1105. That's where I'm okay owning ONDS. Okay. I wish I waited a little bit. There's a little bit more dip in the day. I could have got $2, put me right at 11. You know, it is what it is. Now, I can manage this. Why did you buy two put options on ONDS for a lower put? That reasoning having two different strikes. So the reasoning was ONDS has been holding 12 very strong, so I wasn't 100% sure I'm going to get the $12 ones assigned to me. Now it's bouncing between the 12 and 13, and there is a possibility I actually get assigned on the $13 strikes, and it's only a 30-cent difference to my cost average, right? Big picture, stock is going to 20, 24. I'm not going to worry about the 30 cents. I'm just going to be mad I don't own enough stock. Does that make sense? No, so as far as ONDS goes, I'm not interested in buying the stock outright right now. So so I wouldn't buy ONDS at the $12 right now. That's why my cost average would be 11. So, and the reason, if you take a look at our chart here on ONDS, right? Okay. Do you see this? The middle of this band? It tends to act as support. The Bollinger Band is a rubber band. That's all it is. As you can see, come up, touch the band. Come up, touch the band. And then we broke through the band and we're coming back. This middle band is at 1078, which has acted like a pretty good support here. Okay. Now, where's the bottom of the band? Yeah, it could go to 6. Okay. And I'm going to show you how you can protect yourself running the wheel strategy. Okay. But this is the safest way to be in the market without being in the market. Okay. And again, I'm gonna show you. But I see that this band is acting like a good support. My cost average on some of them would be 1065. Maybe some will be slightly above at 1105. But this band is moving. This band is a 30-day moving average, which typically we try to hold a 21-day moving average. So 30-day is perfect. Okay. Again, once you break it, boom, acts as support, acts as support, act as support, breaks it. Okay, we fell through. Support, support, support. Okay, we have a lot of momentum going for us. I'm okay owning the stock. And the reason I'm okay doing it also is because I know how to manage it, and I want to teach you guys how to manage your positions so you're not so stressed about a CSP. Okay? One, closing a CSP is far cheaper than closing a stock that is running down. What do I mean by that? If I bought ONDS yesterday, somewhere, I think when I did the CSPs, it was like 1230, 1228, right? I would be down 10 cents a share, right? Roughly 10, maybe I'll just do 10 cents a share. So if I bought, I think I did a total of like 40 contracts, so it'd be like 4,000 shares, right? Well, I'll show the Robinhood one because that one I have pulled up. So 15, oh my gosh, 15 times your 100, which will be the 1,500 shares, times your 10 cents. So I'd be down $150 if I just bought the stock at that moment. Okay. What am I actually down in Robinhood on that position? I'm down $15. So just because the stock moved down a good chunk from when I got it doesn't mean the CSP moves down that same amount. I can close my position at a $15 loss and just reposition myself. It's $15. I'm not going to stress about the $15. So like the loss difference, if the stock continues to go down, the stock might go down $1, $1.50, and I will only probably lose 50, 75 cents a share versus $1.50 a share. Okay. So that's one, protecting yourself. Two is we can roll this and adjust the option entirely if we want to. So for example, if you didn't like ONDS right this second, all of a sudden it dipped and you wanted to change your entire position, but you didn't want to sell for a loss, okay? What you would do is all you do is click onto your option, okay? There is a roll this position button. Robinhood makes it the easiest. Fidelity is actually still pretty easy, okay? And all in simple terms, what is rolling? Rolling is kicking the can down the road. How many times have you guys procrastinated and kicked a can down the road? That is all this is, okay? My mindset of owning ONDS never changed. Now, does the market continue to chop and maybe it's not the best time to buy it and I want to buy myself a little bit more time, make a little bit more premium? I can do that by rolling my position, okay? So you always roll to a credit. Number one, roll to a credit, okay? So if I hit roll this position, I can now adjust what I'm going to do. Okay. And the way it displays in Robinhood, and I don't want you guys to panic because I think Miguel rolled and he messaged me and he goes, "What does this mean?" It says I took a loss. Okay. It's going to display a loss, but that loss is going to be offset by a new premium that you're getting paid, which will eat the old premium and give you more. Okay. So in the account, when you do the transaction, it will look like a loss, but your account will actually go up. Okay. So just roll with it. Yeah. Rolling's the best part. So And I don't know if you guys saw, but Robinhood finally rolled out what Fidelity's been doing. Fidelity pays you when you have cash. As you guys know, cash sweeps, right? Money sitting in your brokerage, earning interest as cash, right? If you have cash in there, you're getting paid your 3.5 or 4% interest rate, right, on your cash. Fidelity, when you did a cash secured put, the money they tied up as collateral set aside, if Fidelity was paying interest still while it sat there. No other brokerage was doing that. Robinhood just rolled this out starting in March. So now when you do a CSP, if I roll it, my cash that is sitting there waiting to buy a stock is still earning interest every month. Huge, huge benefit for Robinhood right now that is making me want to switch entirely over to them. I'm going to hold off still a little bit longer, but I'm pretty close to switching entirely over to Robinhood. So rolling. Okay, let's just say you weren't a huge fan. Again, I roll, but I wait till I'm within 2 weeks of the expiration date. 2 weeks. Okay, so right now I wouldn't be rolling this, but just an example, I can roll. And let's just say February 20th, I'm like, maybe we should kick this can down the road. Okay, well, I can do that. Let's just go to March 20th. Let's kick it another 30 days out. Okay. Okay. Well, if I wanted to, I could still say I will buy it for $13, but my new premium will be 266, so I will gain an extra 70 cents a share on top of the $1.95 I've already collected. So if we take that into account, what does that look like? $1.95 plus this 70 cents. So now I get a total amount of 265, right? This premium, 265. I get this new total amount of 265. Okay. Well, I'm still buying the stock for 13. So now I'm going to get to own the stock for $10.35 instead of buying it for $11.05. Okay. That is why I'm comfortable leaving money inside of a cash secured put, because I can adjust my premiums. Now, it's not always going to be the same exact perfect rolling scenario, but if you at least roll further out and keep the strike, you can usually get some premium, a good chunk of premium. But I can adjust and make my buying situation better. Now, that collateral is going to be tied up longer into March. Okay. So, got to keep that in mind. But it is going to make me, if I don't get assigned, it will make me an additional $1,000 in premium because I'm going to make 265. So if I don't get assigned this, I will get to make 265 a share. So times the 1,500 shares, right? I'm still going to make $4,000 in 2 months for not buying the stock if it's above 13. Or I get to own it for the 1065 in March if it's below 13. Okay. Yeah, so I usually get this question of like, where's the downside? Why don't others do this? Why are more people not doing CSPs? It's the same reason why a lot of you guys don't do it. One, it might be because where you live doesn't allow it. Sorry. And I'll go over an option for you. There's a workaround because I know you can do covered calls. I think Canada doesn't do cash secured puts, but Canada also does covered calls. I don't know about Sweden. So let me know. Can you do covered calls? Your goal would be to try to do CSPs, and some people only do CSPs, like try to buy stocks that way. Um, but you can miss out on a lot of upside if you don't get the shares, right? But when there's more downside risk, but still a good potential upside, like for ONDS reasons, my target is 24. My goal is just to buy as much as I can, but I didn't want to buy in the 12s. I want to own somewhere 11 or less. 11, 9. If it got to 8, I mean, I'd just dive right in, right? Um, but you can miss upside, right? If you don't get assigned the shares soon enough before the move happens, you will miss out on potential upside. You will still make some money because you're going to collect the premium, but you didn't get to make all the upside. So there's a mix to it of why you want to do CSPs sometimes and covered calls sometimes. I like to do CSPs when I don't love the current price, but I still want to own the stock if it could just drop a little bit more, right? And for example, ONDS, this stock, as you guys have all seen, has gone from like 13 one day back down to 11, up to 15, back to 11. Like it does huge swings. So I placed a little higher strike and I based it with the mindset that I want to own this stock and I want to own it for whatever the strike is minus the premium. Okay. That's what I went in with the mindset of. I didn't go into the mindset of I want the stock to fall to this certain price. I just said, where am I willing to own this stock for? And I'm willing to start my position at basically 11 or high 10s. That's where I want to start my position in ONDS before the big move to 24. If it goes to 24 without me getting these shares, I will still make, whatever the $4,000 or whatever the premium is, and I'm happy with it. I'm not going to chase it at these levels. I still want to buy it at a discount. Okay. So if that stock has the potential to run like set L, buy shares, maybe also run CSPs. Yeah. So there's the safe way is if we are in a buy zone, add zone with diamonds, just go ahead and buy the stock. Like if I have these CSPs, I can still manage these CSPs, roll them. But if we get ONDS into a buy zone and I get a diamond, I'm going to go ahead and just buy shares right then. Because what if it takes off and then I still have like a week before these assign, right? I still want to buy some shares because it might run past my strike and then I missed out on all of it. Okay. That is what a CSP is. Does anybody have questions about how a CSP operates? Okay. Please do not get scared with how they display this stuff. Okay. I did a roll. Actually, here we go. Archer. It says I'm up. This is total return. Total return 17%. I rolled this. Okay. I don't know if you guys remember it, but I put it in the trade alerts. Okay. It's going to show I'm losing money. Here it is. Okay. Where is it? There it is. Market value. If I were to close this, I would have to pay back all the premium. Total today's return was this, but total return I'm up. Okay. But I would have to return the market value of this money. Okay. When you do a roll, it's going to look like this. But when I enter a trade, if I do a roll, I've essentially committed to writing this one out. Okay. I'm either going to get the stock or I'm not going to get the stock. Okay. Unless this market value said positive, then you can close it. But if market value says negative, do not close it because this is what you need to pay to close your position. Okay. I'm not interested in closing. Archer, $8 minus my premium of 69 cents. I'm fine owning Archer at $7.31. I got no problem buying Archer for $7.31. So that's what I'm going to do. And if I don't own it, I get to make my 69 cents a share and move on if it doesn't stay below $8. This is the safest way for me to be in the market right now during uncertain times. And that's why I'm not just buying. Like during that dip, I leaned in with the CSPs, right? And then the next day we went right back up and I made my premium, closed pretty much all my positions. And ONDS had a big dip the other day. I had no problem doing it on a big dip day. But who knows? This week, obviously, we see some uncertainty for the early week beginning, but by the end of the week, we could be up. I can close those CSPs for the gain. It's playing the little things right now, but as you can see, I can roll this position completely, and I can roll. I mean, guys, if you want to kick this can now, if the stock gets too far away from your strike, let's say we have a 13 and the stock went back down to $3. You can't roll at that point. You still want to be proactive in your rolling. You don't want this price to get too far away from you. But if I do a roll, you can also roll down. So if I go to March 20th, let's see. So instead of saying I'll buy it for 13, I can say I'll buy it for 12. So I can change it. So instead of what this was, right, they're going to give me 70 cents more of premium to sign this contract. But since I'm going down in price, because I want to buy it for 12 now instead of 13, they'll still pay me an extra 12 cents, but I'm buying it for $1 less, right? So 10.65 was the break even if I rolled to the 13. But now if I roll to the 12, I'll get $2.08. 2 minus 208. I'll get to own it for $9.92 if it's below 12, right? But it's got to be below 12. Below 13 is more likely, and then you got to do the math. Is it worth the 60-cent give to more likely get the share? Or is it, do I actually want to own it for less money because now I'm not so sure, Like I have a little less optimism in the short term, right? So you can roll. And then we get closer to March 20th and it's still below 12. You can roll again and roll again. And eventually, you got to either get assigned or you do need to let the stock go past your strike and then let it just get called away. But as far as when you guys are wondering, like, why I did it, is because this is, you can roll. You can just manage your position. Have your money earning interest every month while it sits here doing this. You're collecting a credit. You're always collecting premium, right? And you're just stacking the premium. And you can buy yourself time. If we went down the road for 6 months, right, and we're just like in a bear market, okay, let me just roll it out to January, right? And we'll just do the 12, right? Cool. They're going to pay me an extra $2.84 to buy it at 12, and I'll get $4.80. So what will I do? 12 minus 4.80. I'll get to buy ONDS for $7.20 in January 2027 if it is below $12. Like, you can just kick it. Correct. Yeah, you can roll. Just keep rolling. Eventually, you need to let it get assigned or eventually let it happen. Like, if your mindset on the company completely changed to the point where you're like, no, I do not want to own. ONDS now is talking about investing in newspapers, and your mindset changed about the company, yeah, close your position, right? Take your loss, whatever it may be. But if your view on the company never changed and you just want to better your premium or better your cost average, or you're just like, okay, I bought stock, I don't really care to get these assigned as much, roll it. Buy yourself a little bit more time. Do whatever. You can manage your position. Okay. Um, yeah, I've rolled ASTS. I did roll ASTS for about 6 months. Yep, that was fun. It was stressful, but it was fun. Uh, that was on a covered call. I was able to roll for about 6 months. So, all right, that's a CSP. Any questions for a CSP? Russ, covered calls is where I'm going to show you for Sweden if you're still here. Yeah, so, and again, you don't want the stock to get too far away from your strike. The further it gets away from your strike, the harder it is to roll. So, if ONDS gets to $11 right at the 11, I might look to roll. Okay? Just depends on where the market's at. But we could look to start rolling the position by a little bit more time, maybe average down, whatever it may be. But we can roll and manage our position. That's why I don't care that a portion of my position is sitting in a CSP. Cool, Russ. Covered calls is next. All right, so I'm going to go back to this little visual. Step 1, cash secured put. All we're doing is saying I will buy a stock for a certain price on a certain day if it is below that price. That's all you're saying. Okay, while we're waiting for this stock to either get assigned means that it's below and now you got the shares. So you're either waiting to get assigned or you don't get assigned, right? You don't get the shares or you do get the shares. If you don't get the shares, you're just back to step 1. You're just trying to buy the stock again. Just want to buy this dang stock, okay? Step 2, okay, or scenario 2 is you get the stock. So ONDS for me is below 13 on February 20th. I get the shares. I get assigned. Now I can go to step 2. Step 2 is selling a covered call. That's all we're doing. So I know a lot of you guys have ASTS and ONDS, right? So we can look at those. ONDS is going to be the opposite way. We're going to wait for it to be at the top of this band, okay? Top band, okay? A green day, which is why the premiums might be a little off because yesterday or Friday was a red day. But you want to wait for a green day because the premiums on a covered call, you'll get paid more if it's on a green day. Covered or cash secured puts, and why I did it yesterday was premiums are better on cash secured puts on red days, okay? So, covered call. What is a covered call? How many times, again, I'm going to resort to this because every single one of you has said this in your investing career. If a stock got to this price, I would sell it. Okay. Every single one of you has said that. And all covered calls are, again, is putting your money where your mouth is. Okay. Um, let's look it over right now. So if I was to own ONDS right now, I know there's a few of you that own a lot of stock in it. Okay. If you were like, I would sell ONDS if it went back to, I don't know, 15. Whatever the 30 delta is the answer, but I'm going to show you. February 20th. Okay. 30 delta. There we go. I could sign a contract right now saying I will sell all my ONDS share for $15 if the stock is above $15 on February 20th. Okay. So let's just say I think one of our members has roughly 7,000 shares. So you could do 70 contracts. Okay. So he could sign a contract right now saying, I will sell all my ONDS shares if on February 20th it is above $15. If it is above $15, you have to sell your stock for the $15. But you also are going to collect 68 cents of premium. So you are actually signing a contract saying, I will sell all my shares for $15.68. Okay. But you need to give me that 68 cents up front. So the second I sign this contract for 70 contracts, they're going to go ahead and deposit $4,687 into your account. Okay. With that money, you can either withdraw it to pay bills, right? Because that premium has nothing to do with your actual share price appreciation. All it is the extra money. That's all it is a little bit of extra money to make your little, where you said you'd sell the stock, just get a little bit better. Okay. So if I need to pay bills or pay rent or something, I can go ahead and sign that contract. They'll put that money in my account that day. I can go ahead and withdraw it, pay whatever bills I need to pay. I still have my stock. If it goes above 15, I'll have to sell it. Okay. If it's below 15, I get to keep all my shares and I get to keep that $4,600 in premium. Okay. Now, can you roll? You can roll. You can roll covered calls. I don't have any covered calls right now to roll, but you could roll. And it's the same way. You roll. If you said I'll sell it for 15, the stock's getting closer to 15, you want to roll it to March, you can sell it still for 15, but you'll collect more premium. Or you could try to get it up to $16 instead of 15 and you'll collect a little less premium. Okay, but it's always rolling to a credit. If you roll to a credit, that means you're getting extra premium. If you roll to a debit, that means you need to pay to make that adjustment. Okay, I only roll to a credit because the scenario right here of $12 to 15 is a win, right? Now, if I wanted to roll it to 16, but I had to pay for it, I'm taking a winning scenario and paying to potentially make it a better win. But there's no guarantee it goes above 16. Premium is guaranteed money. Strike price is only potential money. Just remember that. If I was to sell a stock and say I will sell it for 15, right, and the stock never gets there, well, that was just potentially money I could have made if it got to 15, but I guaranteed I made myself 68 cents. But I could do 14 and I'll make guaranteed more money by the 89 cents. Does it get over 14? You don't know. We can do the best we can analyzing. We don't know. So I try to just stick with my 30 deltas as best I can because there's a 30% chance it gets assigned at that price and it's a 30% chance or 70% chance it doesn't. Okay. I don't have any current covered calls. And the reason for it is I want to be able to get into cash positions right now. And I don't want a covered call to limit me because I was asked about SoFi yesterday. And I have a SoFi position. I have 4,000 shares of SoFi. Okay. Now, SoFi has earnings this week, right? So, I do have a covered call. Okay. I didn't put this trade alert out there because it's a test of, I told you guys I was messing with a new type of options play. So I don't know, I might lose this money. I have no clue how it's going to go. I strictly did it as a test. It was like a $125 test. Okay. So, let me see here. Let me log on to that, not on the main screen here. One sec. Correct. Yeah, covered calls act as insurance if it does drop. That's the good part. Now, the bad part is during this time, and why I'm not doing it is because I want to be able to completely sell out if we get into a correction. If we have a covered call, you can sell that, but then you need to sell the covered call first to then sell your shares. And I don't want to have this limitation kind of set on me, so I didn't do it. I'm not doing any cover calls right now. I just want to be able to sell a stock during these uncertain times and not worry about it. Let me see. Where's my covered call? Okay, here we go. What's the best way for me to show this? Sorry, I'm trying to figure it out. Okay, SoFi. I think this is the best way. Okay, this is Fidelity's platform. I technically have this covered call on January 30th on earnings for $30. Okay. I don't even understand what this is showing me, to be honest, right now. I've never used this view. Okay, because it's paired with shares. That's why. Okay. It's paired with this contract. So what I did was a vertical. I basically said I'll sell 500 shares at $30 on January 30th if it's above 30. And they paid me 14 cents per contract. So $70 roughly. If the stock of SoFi is above 30, I will then have to sell my shares at $30, 500 shares. If it is below 30, I just get to keep the $70. Okay. It doesn't look like I can this roll? I don't know. No. This is a different one. This is not the same one. So I can't do it. So I can't show you the roll on a covered call, but I have no covered calls really at the moment. That was just a strategy test for a week and see if it works in our favor. Okay. Basically just playing a pop. We'll see. Where is it here? Yeah. So Russ, real quick, if you are in another country and you can't do cash secured puts, but you can do covered calls, one way to do it, and I think this is the best way for people with those limitations, I guess. For example, what's a good one? We'll just go to your let's go to hymns. Okay. If you wanted to, you could buy hymns right now for $29.60. Okay. So since you can't do cash secured puts, you have to buy the stock at the current price. Okay. $29.60. Now, let me just move that to the side. You can do what I believe is covered calls. So what you do is you're going to sell a call and you're going to do your normal covered call stuff. Okay. So February 30th or February 20th. Okay. And you're going to set the covered call for the strike right above the current price. Boom. So you have $29.60 and you're going to sell your $30 covered call, which is basically $2 in premium. So if it goes above 30, you will have to sell your stock. Okay. But the mindset is not that I care that I'm selling my stock at $30. The mindset is I'm trying to own this for cheaper without the capability of doing a CSP. So you will buy it at $29.60. You will then sell a $30 covered call, which still makes you 40 cents a share if it got there, but let's just act like it doesn't. Okay. Let's just say it stays down below 30 for a week or until February 20th. Okay. That just means you're going to keep your $2 in premium. So that means you're going to get $2. It's not going to go into your cost basis, but in your account, it will feel this way. Okay. So it'll be like you actually bought the stock for $27.60 because you got to keep $2 in premium. If it goes above 30, right? Okay, that's fine. You basically bought the stock for $29.60 or sold it for $32, 30 plus the $2 in premium. 32 minus your $29.60. So you still made $2.40 a share in a month, and it's fine with you because you weren't even 100% sure that the stock was going to stay or go up from there, right? That is the best way I found for anyone not here in the US to do CSPs, I guess, is to buy basically the stock right then and there when it's super undervalued already, and you want to buy it, but you just want a little cheaper. It's just to buy the stock, sell a covered call on the strike right above it, and collect the premium if it stays below, which saved you $2 a share. And then if it went above it, you sold the stock and you made, the $2 or whatever the premium is. For covered calls and cash secured puts, I did a Robinhood test account. Or in my Robinhood, I basically was willing to lose a little money to learn. I mean, you have to be willing to lose money to learn these strategies, and that's why I just did one in my Fidelity account, was so I can learn how it moves this week based on SoFi's movement. And if I lose out on the $125, I lose out on the $125. Um, you have to be willing to do that in order to understand these things. So, for the example of like Archer or ONDS, right? Um, you need to be able to make one contract. Just do one. Miguel did one contract on ONDS, and the man can't stop doing CSPs and cover calls. He's hooked. All he wants to do is this. That's all. He's like, I'm just doing CSPs and just doing covered calls. That's awesome. I think CSPs and covered calls is one of the best strategies to implement to learn how to be safe in the market when you're not 100% sold on the current price it is. But you still want to be in it. Like, I don't want to have too much cash where I'm not in the market. Like, I don't want that. I want to be in the market. I can see the upside. I can also see the downside. So that's why I'm doing CSPs. For me to fully understand, I probably was diving into CSPs and covered calls for about a month, just about to understand how they moved, right? When I did a covered call and I understood the stock went up, my covered call technically went down, and then when the stock went back down, the covered call went up. I understood how it moved. Once I was up, I took my win. I just closed the position. Okay. It took me a minute to understand the rolling. Now I understand the rolling completely. And now I understand if I'm doing these things. Okay. If you are doing covered calls or cash secured puts, you have to be willing for the action to happen. Meaning, covered call, you have to be willing to sell the stock. Okay. If you go chasing a stock with a covered call, you are going to kick the can so far down the road, the stock will end up coming from the like ASTS to 100 back down to 60. You're going to be like, dang, I wish I just sold it at the $80 covered call I had instead of rolling it like crazy, right? Like, there are things like you will want to do, and you will chase the FOMO and just realize that that stock is going to come back below where you probably just sold the stock. Okay. Yeah. Like, it happens. You're going to feel that way. But you have to remember that the stock can fall back in that time frame. You can kick the can, but like I said, I like to roll once we're within 2 weeks of the expiration date, because if you roll too early, a lot of things happen in 2 weeks in the market. So I like the final 2 weeks to be when I decide to roll. Any questions about covered calls or cash secured puts? And I'm going to pull up the little diagram thing again. So, step 1, try to buy a stock. What am I willing to buy a stock for? Go ahead and set that up. Okay? If you don't get assigned, you just keep repeating step 1 until you finally get assigned. Step 2, once you get assigned, we go to sell covered calls. I will now sell this stock for a certain price. Cool. Once you set your covered call, if it does not get called away, meaning the stock, you said you'll sell HIMS for 30, HIMS did not get above 30, so therefore you just do it again. Step number 2, repeat. Once it actually stayed above 30 and the shares got called away, you're back to step number 1, trying to buy a stock again. Keep trying to buy a stock. It might take you 3 months to try to buy a stock. Okay? But in the 3 months, you also made money because you didn't buy the stock. Okay? That's the fun part. The market goes up or down. Either way, during the strategy, you are making money. Okay? That's the fun part. Now, you guys have access to our wheel strategy tracker. Okay. When you get it, it'll say make a copy, and that you'll have your own version. You need to make sure you have a Google Drive. Okay. This is going to be your calculator. I like to make 3% return or a 36% annual return minimum. Okay. So inside of our Discord, let's see if this all works for you guys. Where's our Discord? Okay, maybe not. There it is. Inside of our Discord, I showed you guys a few things on my buy alerts. Here you go. ONDS, cash secured put, right? Here's your ONDS. I just typed this in. Current stock price. It tells you right there, 12.17. Put option, so $13 strike price. The premium I got was $1.95. The expiration date is February 20th. And the number of contracts I did was 20. So this is what I saw. Okay. Tell me if this all makes sense to you. Okay. This is the contract I signed up for. Total premium I will collect is $3,900. Okay. 26 days till expiration. That means I will make $150 a day in premium. Okay. Think about going to your normal job, right? How much money do you make per day? That's essentially what you're trying to replace. You're trying to replace premium with the amount of money you would make per day at a job. Okay. Collateral required. It requires $26,000 to do this. Okay. The premium total return is a 15% return if you only collect the premium. In the next 26 days, if the stock is above 13, I will make a 15% return. The stock does not need to move 15%. I just need the stock to move 6%, 7%. For it to not give me the shares and only give me the premium, I needed to move 7% to make me 15%. Okay. If I can do this every 26 days, my annual return would be a 207% annual return. Okay. You don't need to find the big heavy hitters. You do not need to find the stock that is going to go from $1 to $5, $6, $7, $8. There's so many stocks out there that can do that, and there's a lot of stocks out there that cannot do that. Okay. You just need a stock that moves enough, positive, negative, both ways, doesn't matter, that can swing, that you just need the stock to move 6% to make your 15%. If you can just do this once every month, it doesn't have to be on the same stock every month. It could be a different stock every month. You can annualize a return easily of over 100%. And if you can find really good companies and do this well, you can easily average a 200% return just on premium. That has nothing to do with the stock's return itself. Win rate? Win rate's a tough answer. And the only reason I say that is because if I consider it a win if I get my shares. Like I haven't gotten a stock, I guess, that I've sold for a loss that I wanted to accumulate the shares. Okay. Now, do you mean what is my win rate to not be assigned? Because I don't always place them to not get assigned. Like I never place something to not get assigned. If that makes sense? Let me know, Damien, in the chat. But the number one question was, do I want to own the stock? Like, do not do a cash secured put if you do not want to own the stock. If you don't want to own it, I'm telling you right now, do not do it. If you do not want to sell the stock, do not do a covered call just thinking, oh, I'll make a quick little buck if it dips. Don't. Because if you do that, I guarantee the same way when you sell a stock and the stock goes up, right? You feel that every time. You're like, I sold it and the stock went up. It always does that. Second, you do a covered call, the stock is going to blow past your covered call, especially if you had the mindset you didn't want to sell it. Okay. So now if I go to, I think I have a spreadsheet in here. Let me see. Sorry, let me move this to the side while I find it. No, I'm sorry. I'm looking for my old one. This one. Here's an example one, I guess. I don't know. I'm going to go over. This is like an older version of it. Here's BBAI. So, okay. I'll wait for it. I think HIM's a great stock. If you want to own HIMs, this is a great time to be placing tons of CSPs. I already have my position in HIM, so I'm not placing a ton of CSPs. But the next red moment, if you get the dip like we are now in 29 and you get another red day, I think it's a great time to start placing $26, $27 CSPs and collecting premiums. You're either going to own the stock really well or you're still going to make money. And I don't think there's any problem with CSPs on HIMs right now. So this is the log we use. Okay, I have this log. It's a free access for you guys to download. So make sure you guys use it. This is the old one, but for example, I did CSPs on BBAI. Okay, look at this. I was set up to make $3,500 with these CSPs. I had to hold it for 32 to 25 to 39 days. I held them for 1 day. I closed them the very next, just like you guys saw me do that, right? Well, out of 15%, I collected 9% of it. Okay. Out of 6%, I collected 4% of it. Out of the 16%, I collected 7.5% of it. And the next day, it just spiked over my strikes, and I just went ahead and closed them because if I can get ultimately half, if not more than half my premium within at any point within the first week, I will close my position because I didn't sign up to get the rest of the premium, right? Like, would I sign the contract if I was only going to collect 7% for 31 days? No, I wouldn't have signed that contract. I signed the contract because I wanted to collect 15% over 32 days, right? It has to make sense. You can close these positions early for the gain. You don't have to hold them the whole time. My average, if I can find the right log, I have tons of them while I was making this. So sorry, I'm trying to find it. I don't think this is it, but maybe. No, total wheel log. Nope. So I'll have to find it and then we'll go over it more. But so master note copy. Nope, nope. I don't think it's either of these, but maybe. No, I think this is the. Yeah. Anyway, the ultimate aspect of this is you can track it. No, there's no fee. I mean, I think you might have to be a member, I think, to gain access to it. But let me go back to the new one here so I can show you master wheels strategy template, I think. Yep. So there's all these calculators. Okay. Covered call calculator, same thing. You want to make sure you're making enough on your covered call. Okay. Here's your wheel stock log and then total log. Okay. And I wish I could pull up my old one. If you just give me a sec, I'm gonna find it right now. I'm gonna find it. Shared. Template. No. Nope. Sorry. Just quick second. I want to find it because I'll show you our win rates and how we kind of do on this stuff. I don't track it as much just because I'm trying to make sure everything else is going well in the Discord and everything like that. But I know we have it. I didn't delete it. There's no way. This one? Man. Any questions? Pop them down in there while I'm doing this real quick, looking for this because I'll keep answering questions. It's amazing if you know monthly income of 5K on the wheel strategy. How much capital do you need? Well, it's going to come down to how aggressive you are for the premium for the 5K. If I base it off of a 3% monthly return, that's what I would base it off of. then that's you just got to do the math on the 3% monthly return. I don't know where this thing went. That's crazy. Is this it? Did I find it? Nope. Darn. Okay. Well, anyway, when you do this, for example, I knew my max days I held when I went into a trade, it was like 26 days. And then when I closed my trades, it was typically a week. And I with it, if I'm closing it because it's a win. If I'm holding it, it's because I'm gonna get the shares assigned. I'm not going into it to close it. Like I don't just close it because I'm not gonna. I don't like. I guess I want to own the stock, so I'm good owning the stock. There is not a loss. I guess it's hard to say the win loss ratio because I'm just, yeah. I'll find it and I'll have to do another live stream because I found the sheet. I'm trying to see if I accidentally deleted it, but I don't think so. Do I have the old one? I mean, I have some of my old transactions here. For example, did a covered call, $14 strike for SoFi, 5 contracts, 20 cents, make $100. I held it all the way. No, I let these get called away. They got called away. Closing costs, boom, assigned. Sold 500 shares at the $14. Okay. So overall wheel profit $134. This is an old sheet. Here's sound. I did cover calls. Look at how many times I tried to sell it for $13, $13, $12, $12. 3 days, 7 days, 10 days, 21 days holding. I moved on to a new sheet that way. That one's not closed, but I rolled. Here's a roll. So I rolled it to 6 to the 27th, paid a penny to close this position, reopen another position 21 days later. And I'm pretty sure this didn't get called away either. I collected all the premium. So this was like an extra $2,800 in profit from owning Sound and made all the premium. Here's a roll. And I got out of this one. But look, I've owned HIMS for a while, right? 33 covered call, 39 covered call, 50 covered call, 60 covered call. Roll, 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 roll until January 16th, 2026. And guess how much? Here's your overall wheel profit. So I did more rolls since then because I've owned more shares now. But overall, during this whole time of owning it, right, I can make money. I still make $4,000 while just owning HIMS during this meantime. Okay. We did do some trimming, but these weren't all my shares. I just was doing it on half of my shares. So I can keep my cost basis down. Original cost basis, $20. So I'm good at that. That's the same thing. That's what I mean. I can roll. This was a whole year rolling. A whole year. Did it starting in February and rolled it all the way to January. Here we are. Boom. Now I still have my shares. Good to go. Where ASTS. Here's one. Strike 30, 40. Boom. I rolled this one. Didn't end up getting that one assigned. Archer, sell calls, sell puts many times. Here's wheel profit premiums. There's more premiums. This is, like I said, an old account and everything like that, but you will be able to enter all this information in. It automatically enters. So let me zoom out real quick. When I enter only into the yellow sections, okay? So if I did SoFi, you just do that. It will populate SoFi Technology. Here's your average volume, PE ratio, earnings per share, 52-week low, 52-week high, 30-day trend line. Okay, if you need any information, here's your Seeking Alpha quick link to whatever ticker you put in there. So if you put in SoFi, you put in ONDS, this link will take you right to Seeking Alpha, so you can read up all about it. Okay, you do not enter any data into the blue. Okay, so just for an example, just so I can show you guys, 0125 cost basis, I don't know, $15. I'm going to do a call. I'm selling a covered call. Expiration date February 20th. Let's just say the 30. Let's just say 5 contracts, 15 cents. Okay. That is a 1% return. So I wouldn't make that trade. 14% annual return, 26 days. This would probably actually be more like probably 35 cents right now. Okay. 2.33%, 32% return, 26 days, requires $7,500 worth of collateral because my shares are my collateral. So that's what the cost basis is. Okay. Now, if I go over here to my total wheel log, it'll automatically put this in here for me. I don't need to do anything. It will just tell me what stock. It'll put all your stocks in a row as long as you change it. So you can change the name if I zoom back in. Sorry. Zoom in. I can rename this to SoFi. Okay. Now, when I go here, right, SoFi pops up. This is my SoFi sheet that it automatically inputs. So now I'll know what I go into my trades thinking. And then when I exit my trades, what does it look like? My annual profit, I think annual profit entering was like 106%. My annual profit actually with me closing got closer to like 400% annual return by running the strategy and by closing early and doing things like that. So once you change those names, that stock just stays on there. When you get assigned shares, you just enter your shares so that way you can follow your cost basis. Okay. So if I got shares on 116, transaction was assigned shares, right? Which was a buy. And let's just say it was those 500 shares at $15. So there you go. So now my original cost basis is 15. Based on the premium I've collected, my now adjusted cost basis is 1465. Okay. Current profit on the stock, overall profit with your wheel profit, strike profit if you were to sell the stock at your strike price of $30. This is what your strike price profit would be. And then if you were to be exercised with the strike profit with the wheel profit, your total exercise profit would be this much. Okay. This spreadsheet breaks it all down for you to completely track each individual stock's positions. Okay. There is a total of 20 stocks you can do. Okay. I didn't put more because one, you should not be doing it more than 20. Two, this sheet should be used annually. Okay. So that way you can look back, track your annual progress on the wheel strategy for 2025, 2026. Okay. View, show, where's Zoom? Let me go to 90. So you just use it for every year. Once a year, just open up a new one. You also have a fresh dashboard, okay? So this dashboard will show you the wheel strategy. This will show your actual performance of stocks because you'll keep track of your portfolio in here. This will show you everything. If I put in SoFi here, okay, number of shares, 500 shares, $15. Okay, this will show you 30-day trend, 365-day trend, your 52-week range. Okay, this has everything you could possibly need, I think, of tracking anything. Now, if you close a position, it does not track the closed gains. Okay, what it does track though, when you enter your liquid cash, right, your cash position when you go to close a position, if I close this for $7,500 gain, well, when I now enter my new liquid cash, it should say $7,500 more cash than I had originally, right? So your year-to-date performance and everything will stay the same. You put your current year-to-date on January 1st, whatever your total balance was. So if your balance was, 50,000, you'd put 50,000. Okay, that way it keeps track of your year-to-date. If you see a little black triangle in the corner, that'll have a little note for you. Okay, because someone asked, what do you do for cost basis if you don't own it yet? Okay, when you are logging a put, a cash secured put, you use your strike price as your cost basis. When logging a call, use your original cost basis and B13, whatever you own the shares for. Okay. So that's there. You have comparison tools so you can compare different cash secured puts plays, different covered call plays. You have different calculators to use. Okay. You can do a watch list so you can actually put where you want to buy the stock so you can keep a track of that. Okay. Let me see what kind of questions we have. Folder are located. You mean like where the trade alerts are, or are you talking about for the like educational stuff? Again, only edit the yellows. And do not put any spaces when you do these labels. If you change any of these, rename them. Don't do any spaces. So I'll answer both, I guess, just while we're looking at this. CSPs, as far as trades, all my trades go here into chill trades. Okay. These will be all my trades. If I'm at my computer, I'm using this embedded. When I'm on my phone away from things, I just can type. Okay. So that's why you saw this way. Now, if you're looking for the educational stuff in here, this is our classroom here where I have these notes on things. So wheel strategy step number 1. Okay. And this goes into cash secured puts, cash secured put questions, cash secured puts, finding your strike price. And then step 2 is going to be your covered calls information. So there's all that. I meant to put the diagram with the little circle. Okay. Trade alerts. Yeah, it's all going to be inside of my chill trades, which is available to everybody inside of the free Discord. Okay, paid membership to get the indicator, to get the more trade alerts, to get when we eventually get more bots. But right now the weekly bot is part of the membership. And then if you want to, if anyone's in here, you can also request charts. Okay, will I get to it right away? Maybe not. Okay, but if I'm here and I have time and you guys request charts and I've been pretty good about it, I will go ahead and upload it into the stock charts. But you need to listen here, okay? How many tickets can I open? I prefer if you just open one per week, okay? Can you do more? Absolutely. Does it mean I'm going to listen to it if I see your name is in there 12 times? Probably not. Okay. Don't abuse it, right? Because I will hide this occasionally when I have too many requests and I can't get to them all. Okay. How many tickets can I request? Two tickers per ticket. Okay. So submit a ticket each week, put 2 tickers in there. If we get too busy, I will just go based off of if I see 10 requests in there, whatever the most popular request tickers are, I will do those ones. So if I get 6 of them for ONDS, I'm probably going to upload ONDS. Okay. This isn't going to be available 24/7. When you do see the request chart available, go ahead and do some requests. Okay. And then eventually I want to get our more alerts. I will get the bearish. Once I can get TradingView upgraded, we will get more things in here to help everyone keep eyes on bullish and bearish things. Okay. So that's important. Any questions coming up, guys? Questions about strategies and Q&As and all that kind of stuff. If you guys wanted to see Bollinger Bands basically and why it reacts that way is why I do CSPs. I typically do CSPs at the bottom is because they're undervalued. That's when they're tending to be undervalued and you tend to see a bounce. Okay. Why I'm starting ONDS at the middle of this band is because it tends to find a good amount of support there. I'm willing to do that. I will also be buying if it drops below that. So, and I will roll and we'll manage our positions and everything like that. So I'm not worried. Any other questions about the wheel strategy, about the indicator, about certain scenarios? Please put them in the chat. Okay. And I will show you, here is my current, without adding the testing holdings, like while I'm testing certain strategies out, this is currently what we have. And I do have ONDS in there but it's all CSPs. Okay. So we have some SBET. We have Archer. SBET, I'm just waiting on Ethereum. I'm just going to hold it. The only way to make money with those treasuries, by the way, is to just hold it. Okay. As much as you would love to time it, it's super hard to time. It's just, crypto obviously moves randomly. A lot of things happen behind the scenes that you don't even realize in the news. So the only way to be a part of those moves from $20 to $80 in a matter of a week is to just sit there and own it. Sit there and hold it, own it. I'm not worried about Ethereum. They are the second largest holder, I believe, right now of Ethereum. I have no problem. Okay. Archer, we got daily, we got weekly. Is there potential I see it touching 8, maybe high 7s? Sure. But I've owned it. I'm going to own it. There's a lot of bullish things happening I keep seeing on social media, so I'm curious. SoFi, we are getting very close to trimming this. If we lose support on $25, it's going to be really hard for me not to sell it. Oscar, I've already given you guys my mindset right now of Oscar. I'm very upset with that holding, and I don't want it to be a holding of mine really anymore. So as soon as I can get out on this run up of potentially earnings, potentially government ACA, well, now a shutdown, but eventually an agreement will come to play. Oscar will go up, and that's when we'll be able to get out of it, and I will get out. 26% cash position. Um, that includes the money in that does not include the money in the CSP. So I would say I'm closer to a 34% cash position, with ONDS being adjustable. Okay. Yeah, crypto, is it dumping? Sure enough, there it goes. See ya. Yeah. I don't feel great with Bitcoin. I feel better with Ethereum, but yeah, this just tells me the Monday is going to be fairly bloody. That's how I think. That's how I'm taking it into an account. Um, yeah, just is what it is. Um, Crypto tends to actually, I think, lead the market a little bit more of where we're going. So this will be interesting. Can't wait for futures to open up and everything like that. Any questions though about indicator, all that kind of stuff? Does that make sense strategy wise? How I use the indicator on the daily time frame, the weekly time frame, the trend lines? You can use the Bollinger Bands, what the labels mean, what the diamonds mean, momentum bar means. Does anybody have questions? Because right now is the time to answer. I will do more of these live streams. I'll do more smaller ones. This was going to be a bigger one to go over everything to better understand, and to visually see things. But anytime, if you guys have questions, one, message me. Okay, I'm pretty good with responding. Two, there is a help center. Open a ticket, scroll down to the bottom of your thing, and you can type in there and tell me what you need help with, because you are probably not the only person that has a question. Other people probably also have the question, and if somebody can get me the question that needs to be answered, I will then make a YouTube video or whatever, because then I can have it saved, and I can just, if someone asks that same question later on, here's the video, I made a video about this, right? I need the questions to come from you guys to know what needs to be answered. Okay. Awesome, Damien. And no other questions or anything? No, so it's, Robin Hood. I have it somewhere. I'm sure I can find it on X. Not Hod Hood. If you guys, there's okay. I'll go over a few sites I use too that are very helpful. Okay, so Fidelity was used to be the only brokerage that paid you interest on cash sitting in a CSP. Okay. Now, Robinhood is now going to start doing that in the beginning of March. Thought I would have seen the ticker or the post there. So starting in March, here it is. Soon, here, earn while you wait. So 3.25% APY on your cash you're holding in options collateral. So it doesn't have to be a CSP, but CSP is the one I use that would hold my money as collateral. They will still pay you 3.25% interest on the money that's sitting there in a CSP while you wait to be assigned your shares. Because that money is technically not working or doing anything in the meantime, it's just sitting there. So, and you could easily close that position. So I agree they should be paying interest. I've brought this scenario up to them many times in the past 3 months. That Fidelity was the only one. I think that it'd be a great thing for them to capitalize on, as they are one of the biggest in social media as far as the wheel strategy being used is pretty much always on Robinhood, because it's the easiest one to manage everything. So I think they were very good at listening to what the requests were from. I'm sure I wasn't the only one, but I was definitely hammering them a bunch. Yeah, the recording will be on YouTube. It will be saved. So I'll probably repost the link inside of Discord, but it'll be on our YouTube. So yeah, it's good. This is a huge factor because for right now I was doing Fidelity and I didn't mind paying the contract fees for their options because while I was doing CSPs I was earning the interest that Robinhood wasn't paying me, and the interest was making up for the contract fees. So now you can get no contract fees and interest. That's a huge win. Yeah, of course. Any other questions, please fire them away right now. We got 10 minutes of me rambling and or questions, but I'm going to go over a few websites I use. Okay. So you might want to stay tuned also for this. Some of you might not know, but fintel.io is one of them. Boom, boom, boom. Okay. This is where you can look up institutional ownerships. Institutional ownerships and short interest. So this is what I use. So for example, like HIMS is the easiest one for me to just always show. Institutional ownerships for HIMS, right? Like while everyone's all sharing and we're super like everyone wants to be bearish on it, institutional ownerships are just staying up here. They're not selling. Okay. You can scroll down and you'll see the most recent transactions and some of these big ones, right? When JP Morgan in October bought 17.7 million shares, right? That was a big, like, that's huge, right? So fintel.io is a big one. If you go to tip ranks, I don't really use too much, but I think this is where you can see some analyst ratings. Then you could also use, where's my stock twits is another one I use, which is really like a social media one. But if you go, for example, Archer, you can see like overall sentiment is neutral right now. Message volume is pretty high right now. You can see news, and this is where I kind of go to see a little bit more than what X provides. I think this is where X is going to go. And they have a few things about earnings and stuff like that. So StockTwits is good just to get an idea of where the social aspect of it is. Here's Oscar, or neutral. That's kind of how I feel right now. A little more bearish, but so StockTwits is another one. Fintel.io, tip ranks to get analyst ratings. X, obviously we got to use X is a huge one. I don't think Sector Tractor I use is from State Street Management, so I can see overall right now year to date. Energy is leading the charge, materials, industrial. Who's lagging? Financials, communication. Healthcare is slightly up, but it's still not up compared to the amount of down it was last year, right? 1 year. If we take a look here, real estate, here's healthcare. But typically, I mean, over 5 years, if you take a look, energy is led over tech. And right now, it's all energy. We're back onto energy again. So, huge. So, I like to look at this so I can kind of see what sectors are leading, what sectors are becoming undervalued. Right now, it looks like financials, right, are becoming more undervalued at this time. So, I like to look at that as well. Gives me a good idea. So, as far as trend lines goes, Damien, I mean, you have the indicator. I was just kind of going over what exactly our trend lines show in the meantime. I kind of got off schedule in the order of which I did things. But our trend lines, like I said here's a ADA, never broke out of our daily. We did break out of the old one, but now we have this one coming into play. So now we're here. Can we reject, go back down, and pop out of this? Trend lines, I like to have 3 touching points or more. But if you wanted to, guys, do more, draw more trend lines, you can. ASTS, maybe. I prefer actually channels. So if you go to your trading view, there's this little lines thing, and you can go to parallel channels. And if you grab like the top and the top here, and then go to this bottom, right? We were in this little channel bouncing, boom, 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 and we finally broke above it. Okay, and then we hit this other top resistance. So what I would expect is to fall back into this trend line and see like a little bounce here at this like low or high 80s mark. to look for this support initially, and if it can't hold this, then we go down. But I like to draw channels more than I actually draw trend lines because our indicator draws are trend lines. But overall, you could also draw, and this is why I don't love drawing tons of trend lines, is because trend lines can tend to be subjective of what you consider. But there's another trend line. There's 1 point, 2 point, 3 point. Draw it green. So it's just finding where the points are. Now, what do I normally do if I didn't have automatic trend lines? If I just turn this off, okay, I actually zoom out, probably to the weekly, okay? And where are your touch points, okay? So you got to touch here, touch there, okay? So 1, 2, 3, okay? So this is clearly some resistance, okay? Now we draw another one. You can draw, can we touch there? Not really, but so like this is the part where I don't love, but this is how we start. We start with the weekly, okay? Your goal is to find 3 touching points. So is this April? No, it's September. I mean, again, weekly, big picture, this is the channel. I see this as being the channel. Okay? Now I want to zoom in and go to the daily time frame. Okay? And then you want to fix these. You want to find the new touch points. So see how this was like our old touch point on the weekly? I just want to make it touch the daily time frame. Okay? So now here, zoom in, there, there. So this is the channel. This is how I draw trend lines. I start on the weekly and grab as many points, touching points as I can. 1, 2, 3, 1, 2, 3. Okay. And then I zoom in on the daily. Okay. And if you want to get more into it, you can go to the 2 hour. Okay. And then draw more trend lines. Personally, I stick to the big picture stuff. I don't like to draw all the trend lines, but you could draw another one there. Okay. And then you could draw another one. Oops, not there, but let me adjust it. Boom. So now you can see you're in this trend line, and as soon as we break down, we should fall to here, and if we can't hold this one, we should fall to here. That's how you draw multiple trend lines, zooming in. Okay, you always start further out, and then you want to zoom in on the lower time frames. That's how I draw them. I prefer just actually now sticking with our preset ones that come into play. Look, it pretty much just drew what we just drew. Like there was no need for me to draw any more trend lines. If I just change the time frame, there's 30-minute. There's your 5-minute time frame. Look at, once you lost the 5-minute time frame, it just kept going down. Okay. 1 minute. We have any more? Okay, now we broke out of the top. And now we're finding this 1 minute time frame trend line. So you can zoom in and zoom out as much as you want. The trend lines will continue to find the pivot points that we use as a huge like set. So we do have a lifetime membership option coming out. Let's see. Let me see if there's a way for me to show it. Hold on. I just got to figure out, I got to find where I have it. Because the Founders Club is going to be the best. And it's not, that one, the Founders Club is not going to have a lifetime membership to the Founders Club. But the, let me see. Hold on, let me just pull it up. So this isn't live yet, so don't like no one can see this. I wanted the Founders Club to fill up first before I added another thing to like the storefront, and then people were asking the difference of like why what does this one mean? Like, you know, like it didn't make sense to have them both there. But this was going to be the membership of non-Founders Clubs coming forward. So, yes, we will have, this will be the new plan going forward if you're not part of the Founders Club. Founders Club will always be a monthly subscription. Once we get the first 100 members signed up with the Founders Club, the Founders Club will be completely closed, and then it will go to this pricing. This pricing can always adjust. Founders Club is locked in. Okay. If you still find it more useful to do the one-time payment for a lifetime of indicators and your spreadsheets and the Discord and our bots and everything like that, and whatever else comes, I'm always only going to have the free Discord and always just going to have this one membership. I'm not going to make it where there's now going to be a silver, a gold, an elite stat. Like, no, I'm not doing all that. We're just going to keep it nice and simple. This price can go up if you're part, not if you did the lifetime. Obviously, if you do a lifetime, you're locked in, right? But the monthly and yearly and the lifetime could go up, but the lifetime, if you already paid for it, obviously is not going to go up on you, right? You already paid. So this will be the pricing as far as lifetime goes. If you wanted to do that right now, let me know. I'm sure I can set it up where you can sign up for it. And I'll keep you on founder status, which will give you access to everything going forward, anything added. Okay, so I can do that if you have questions. Okay. Make sure you guys go through tutorials, spreadsheet. There's a whole course on it as far as how to input things. And then there is a wheel strategy videos, basically what we just went over a bunch of, but more in depth if you wanted to, as far as like taking time, slowing down. Cash secured puts, covered calls, and how to roll. So if you had questions, I might have an example in there about a covered call and rolling that position because I might have had one at that time. As you can see, when I have a lot of open positions up, so quite a bit. Any other questions you guys have? Make sure you use these sites. These are very helpful to see if institutional ownership is piling in. Obviously, X is very useful. Like I said, you'll see my posts inside of our Discord, so you don't always have to go to X to see them. I'm trying to think if there's any other sites. Simply Wall Street's a good one. I don't use any paid sites. Okay, they're all free sites. I don't pay for any additional access. Okay. If you put your portfolio in here, they'll say if it's overvalued, undervalued. Sometimes you will see on X this probably visual, and you wonder where they get it, and it's from Simply Wall Street. I think you scroll. There you go. So this is the part where take analysts for what they are, I guess, but they say cash flow value is $12 stock, and they currently say the current price is considered overvalued. But sometimes you'll see this on companies, and tends to be they only post this chart when it shows it's undervalued because they want you to buy the stock they're calling out. For example, HIMS. It's 53% undervalued. Cash flow value, it's a $63 stock. Okay. We are, good news, I'm working on partnering with Bullflow. I don't know if you guys know what Bullflow is, but Bullflow is one, and Moo. Have you guys ever heard of Moo? Brokerage. So Moo is another brokerage, and I'm starting to really like their thing. There's a few things I'm waiting for them to give me full access because I will not partner with them unless I can have full access to their product. And they're like, no, you got to deposit this amount of money, and I'm like, I'm not doing that unless I can see what the full product is. Like, I'm not going to ever recommend or use your product unless I can fully experience it. So, Moo is a brokerage. And the brokerage gives you a lot of information, and I really like it. And they are zero contract fee. I mean, they're basically like a Webull and a Robinhood, but I think it's a little bit more advanced. Now, the free version still gives you plenty to look at and view. What I like, so for example, let's just go to, let's go to HIMS, for example. They use TradingView as charting. Now, the problem is the coding I use for our indicators is up to date with their newest version, version 6. Moomoo is still on TradingView version 3. So therefore, they don't have the same capability that our TradingView has. Otherwise, if they can get TradingView version 6 uploaded onto here, we could implement our charts into our brokerage account, which would be amazing. And I would immediately switch to Moomoo. Because then I'd be able to just trade right from here. I can trade in TradingView, but I like to look at options, which we can look at in here. So they have options. They do have some indicators where you can use these. Same thing, Bollinger Bands and everything. So it's just like TradingView. They also have options. Here's your option chain, strategy builder. So if you're a little bit more max return or max probability, if you adjust this, adjust the expiration date, they will build you what the option should be based on the information you put in. If you wanted to see your analysis, trade stats, strike price, volume price, volatility, unusual activity, just like unusual whales, random strikes, like here's HIMS, 19 days expiration, $38 strike, bought a call, 5,000 contracts. So like there's some unusual activity happening. You can filter by bid or mid or whatever. You can see what ETFs this is in. You can see the financials here, what it did on earnings day. Okay. You can see the price movement. There's plus 20%, 1%, 9%, down 15%, right? You can see what it's done. Key indicators, margin, like they give you everything you could possibly want in a very nice visual aspect, as nice as it can be for the amount of data you're looking at, right? Balance sheet, cash flow, revenue breakdown, valuation. So you can see actually you can see this in Robinhood. I know that you don't see this in Robinhood, where the target high of 85. Look at this. Our target by analysts low is 29, average is 43. So if our analysts are saying the low is 29, I don't understand why HIMS is just not a buy right now. If it goes lower, yeah. Could it go lower? Yes. $4 lower? Sure. Could it go 400% higher? Yes. So I'm going to play the 400% higher side and not worry so much about the $4 downside. Okay. Personally, I understand if you want to try to time it, but there's this. So, and if you have the full version here, you would get more institutional ownership data to know. You'll get analyst information also all built into here. And I think Robinhood is trying to get here, but they're not there yet. Corporate actions, dividends, stock splits, shareholders. So you can see BlackRock. You can see all this institutional ownership inside of here. So there's so much information. I do enjoy it. You can see here's your trade flow, how many are being like extra large orders or small orders going in versus battle. So extra large, right? There's more extra large orders going in than extra large orders going out. Same thing with large, medium, small, same thing. Money flow, bid ask, comments. So there's also the social media side of things in here. So we're looking to partner with them. Okay. I'm still trying to work that out, but hopefully we can partner with them and get stuff going. They have really good stock screeners also in here that you can filter lots of things, lots and lots and lots of things. News feed, they are pretty good with up-to-date news feed constantly. We went down the options chain. Here's your market stuff, top gainers, top losers, heat list, high dividends. So yeah, there's tons of stuff going on with there. As far as bull flow goes, bull flows is like an unusual whale. So it's bullflow.io. And I think this would be really great for the community to have access to, because it's going to catch. If we see a diamond in some sort of unusual flow happening at that same time, I feel like that is just like a match made. Like we should dive into that kind of opportunity. So yeah, but you'll see bull flow actions happening. Where is it? You'll get updates. You can see it's a bunch of AI, but you can see the heat seek map that a lot of people are into. So I think bull flow would be a huge perk to the community as well if you guys wanted it yourself. It is a $39 a month thing, so don't have to get it. If I can get it and there's a way for me to kind of make some call outs with it to help us, then I think that'll be worth it. But I'm in talks with them as well. Any other questions? Anyone else I should be looking into? Any stocks? This is the question where I got 12 minutes and you guys can ask questions and I will do my best to get through them all. Okay? Ooh, new no deal is official. Interesting. I'll have to read into that. Target looking good. Any other questions? Oh, is that real? This guy's gonna make another announcement? He can't help himself. What else you guys got before we get out of here? Go through diamonds, guys. I'm telling you, go through those alerts. See if you like any certain charts. I'll tell you which one. Again, I am bullish on is ZVRA. I do want to buy some, but we're gonna wait for the market to tell us what we're doing next week. Like I said, I'm got a fairly large portion of my portfolio is cash. It will be even greater cash if I decide to close SoFi. I'm just waiting to see. It's been holding 25 and 25 has been my thing. As long as it continues to hold 25, we're good. If we lose 25, I don't know. The downside is pretty big. Could I hold through some noise? Absolutely. I'm not scared of the company long term. I would love to flip it, sell for 25 at least, and buy it back for even 21 would be huge. $4 a share, 4,000 shares I have, so it's like a $16,000 swing. Like I don't want to lose 16 to hold through that. I'd rather just buy it back if I can. That's just me trying to time the market. Might bite me in the butt though. Might have to buy it back for more. Any questions? So yeah, so D-Lo, great question. And I'll show you why I'm looking at it. So neutral candle. Neutral. This isn't the best time to buy. It's not the worst time to buy, right? This is the better buy on the green, right? This one would have been the better buy. This is a better buy. We don't do anything on a neutral. Didn't do anything on this neutral, this neutral. Okay? Can consolidate. Now, what I want to look at is the weekly time frame. Okay? I don't love the weekly time frame. Right? So let's zoom out. What does this look like to us? Well, this too, but from here at least to down here, this is a very bearish momentum histogram, right? So I was looking at it. So daily momentum on a neutral diamond. Zoom out. Let's just take a look. We're at the top of this wedge. Okay. So the downside, if we reject, is very high. Could we get a small little bump up? Yes, we could. Okay. But for me, I don't love the position. Okay. Because I think what's going to happen is this little momentum is going to carry if we get this little 5. Okay. Boom, boom, boom. Maybe we get a little tighter. So here, if I was to do anything, would be a CSP. If I was to do anything. Bollinger Bands. Right? Bottom of the band, it's super tight. We got it really tight. Like we could squeeze out of this. As far as risk reward goes, though, I'd probably place the CSP. If D-Lo has enough. Does D-Lo have enough option plays? Always got to pay attention to how many, the volume and all that kind of stuff too. So trade options. Let's go. Okay. So we got February. So this only does monthlies. If stocks do weeklies, that means there's a little bit more volume on it. So 14, we buy it at 13. What does our chart show us? Where's the bottom of this weekly? 10, 11. We're right on support. Okay. So this is the part where I will draw an extra trend line to help me understand. Boom. Okay. We're still holding this. So I don't mind being in this if we can hold this trend line. If we lose this trend line, then we're going further down. Okay. So it's the same trend line. If you lose the daily trend line, you're going further down, and you would just take your short loss and get out. Now you can get in and play this, but just know this trend line lost on the daily, you're just going to want to take your loss. Just it'll be a very small loss, but you want to take your loss and then get out, because the same thing I'm seeing on this momentum shorter term daily time frame. This, look at this momentum. If I zoom in here for you, right? Just we can't seem to get going. So you can play it on the short-term daily time frame. That's no problem. Again, it's a neutral candle, so I personally just stay away from them. But if you're bullish on it long term, then you can play it. But like I said, lose the trend line. You zoom out and you see what that weekly trend line looks like, right? And you got a long way to go down to. I don't think it gets to 7, but the bottom of the band is at least 10. So that's what I'm seeing. Yep. So typically for my portfolio size, I did it. I think I posted something too. I'll pull that up in our Discord. Where is it? Okay. Let me pull up our Discord also. It's in our classroom under risk management. There it is. So right now, HIMS 23%. I want my money in things that are undervalued, that have very little downside. Okay. Like I said, ONDS is a CSP. I can adjust. I can buy some time. I want that money anyway in ONDS at some point, and I will just manage the position. SBET, it's Ethereum based. Nothing I can do. I'm just holding that one. It's 3% or 4%. Archer 6%, SoFi 16%. That used to be more. It used to be a 30% position. I have trimmed it in half. Okay. Oscar is also 17%. Now, it's all going to come down to your portfolio size. Okay. And that's what I want to show you next. Okay. Right here. Portfolio size versus the stocks you hold. 25K portfolio. You should find a really good company and go all in between 1 to 3 stocks. 50K to 100K, 3 to 5 stocks. 5, okay, you can read the rest, right? The reason being is if you can just lean into a company that just really, really good long term, always make sure it's good long term. I never want a company just to be a play for short term. I always want a company to be good long term. But if you can lean into these companies, the gains will be that much better. Okay. Because if you spread out between 20 different companies, again, never financial advice, just educational. But if you can spread your money out through 20 companies, and that one company, right, goes up 30%, but the rest of the companies just stay flat, it's a very small portion of your portfolio that just went up 30%, which in effect to the whole portfolio might only mean your whole portfolio went up 1%, right? So I want to reduce the amount of holdings and go into companies I believe in long term. SoFi, IREN, ASTS, Rocket Lab. I mean, not at these levels, not all of these at these levels, but I'm just saying like these type of companies. ONDS for defense, long term, good play. NVO, drugs, healthcare, HIMS, healthcare, Home Depot, like things like that. You could just get into companies that are good long term plays. If you just go heavier into them, you will grow your portfolio a lot faster. Okay. Sure, drawdowns are harder, but if you were in 20 companies and there was a drawdown in the whole market, it's going to hurt no matter what. Don't think that just because you're diversified, it's just not going to move based on one company. Now, I personally will hold. Okay, if you guys have access to this on this chart or on this Discord, if you go to Chill Trades and go to the top. If you wanted to see my portfolio, it's right here. If you wanted to see my watch list, it's right here. Okay. Now, our alerts list is almost 1,000 companies. Okay. Because everyone deserves to see everything and you can filter through. There's not that many diamonds every day, and there's not tons of diamonds on the weekly. It's not hard to manage. If you see 10 diamonds with our charting, it's it's auto charts it for you. You pretty much just got to type in the ticker and then you see, yeah, I like it, or no, I don't. Okay. But if you go to this watch list here, okay, you're going to see, okay, AI software. Here are my favorites. Data centers. Here are my favorites. Energy. Here are my favorites. Rare earths, drones, space, fintech, health, robots. Okay. I try to have something in every category. Here's my like tech kind of like, I don't know. SoundHound's not that I guess that could just be an AI software thing. I guess sound is AI software. So I would move that, I guess. I don't really have too many like straight just tech companies because I just think I just don't have any favorites right now besides NVTS. This isn't crypto. This is something I wanted to look into, but these are the ones I'm mainly trading based off diamond information. These are my main stocks. Okay. Pick your main stocks. Okay. And then trade those based off diamonds. So this is 30. Typically I would do 20, but I think I like this by the category. So it's fine just to have 2 players or 3 players in each category. But basically ASTS got a red diamond, sell that one. Okay. Now if I get a space diamond for bullishness again, I'll buy into one of these companies. But I'm just staying in max 10 companies at a time. And then I will go ahead and sell when one of those 10 say to sell. And when one of these on this list of 30 say to buy one of them, I'll buy one of them. If you get into NVO, if so, at what price? Yeah, so I like NVO anywhere under 60 is just time to accumulate. I didn't have cash recently, but now I do. So now I am interested in NVO and where I would want to buy it, which you could do CSPs if we get a red day. Where's my health? NVO. Oh, let's go with this. NVO, NVO, NVO. So this is on the weekly time frame. We have a little bit more room to 68 to get there, I think. And again, we are on Heikinashi candles. To see gaps, you can go to the just regular candles if you want to see gaps. Stocks tend to fill gaps. So there's like a gap here. This could go to 101 to fill. There's a few indicators that help you point out gaps too. But you can see this is a gap right here. Boom. So we're probably going to go to 68 right now. I'm not chasing it right now. I don't want 68. I'm good. But what I do want is I want to see where this finds resistance, and then I will do the measured pullback. Oh yeah, did you guys want to go over Fibonacci's? Is a lot, but do you guys want me to go over any of the Fibonacci's? I will do a dumbed down version, the best I can of Fibonacci's. Okay. I'm not going over Elliott waves. That's not happening. There's so much to Elliott waves. I will put a link if you guys want to Elliott waves to know it. I have this Elliott waves little cheat sheet and how to count. It also tells you all about the Fibonacci's. So this is like one of my favorite cheat sheets. So here, I'm going to put it in the chat right now. Go ahead and grab this. This tells you all about Elliott waves and tells you exactly how things move. Okay, for example, because you guys always wonder how I come up with targets. Okay, and we do have a little targets indicator that it is based on Fibonacci's. But let me do ASTS because I love the ASTS example because it does chart very well for examples. Let me hide the Bollinger Band. All right. So if you guys wanted to know basically where a company is going to pull back and when to buy it and where will support be found, right? During this fall, you're like, should I buy now? Well, we're going to look and see if that would have been a good time to buy. Okay. So on TradingView on this left side, there is what's called Fibonacci retracements and Fibonacci extensions. Retracements are for finding pullbacks. Extensions are for finding targets. Okay. So Fib retracements, you're going to grab the bottom of the move. Okay. So before it did this big move, grab the very bottom. So here. Okay. Boom. Grabbed it. Now grab the very top. Okay. Get level with that line. Boom. Okay. Now, there are a few levels in which a pullback can happen. Okay. Those are the levels. There is this level, but I don't like to use it. Okay. The reason it's just not a big enough pullback for me to be super confident in buying it. So 382 is to me, my lowest pullback point. 0.5 is the second. 0.618, which is called the golden Fibonacci, which tends to be the best time to buy, tends to be the most consistent support found. 786, it's getting deeper in the pullback and an even better buying opportunity. These are the best buying opportunities, 0.786 and 0.887, but 618 is the most consistent time to just go ahead and buy. No one's usually mad at buying at that Fibonacci. I'll just say that. So if we take a look at the Fibonacci levels here, right, where was this thing going to pull back based on the top? Okay, well, let me just pull this out further just so we can see it. There we go. We found support and got a diamond right here on the 786 Fibonacci. So we could see, and with diamonds, this helps even more because if I don't see a diamond populate on my Fibonacci in the buy zone, or inside of here, like any of these zones, I'm not interested in doing it. Okay. So bottom to top, these Fibonacci levels are your support levels. This is where the stock will find support. When do Fibonacci levels not work? If this pullback happened and went below my lowest point, then it would fall out of formation, basically. It would become invalid at that point. And then I would have to grab this lowest point to this highest point to then figure out where that pullback would come into play. Okay. So HIMS is a perfect example. It kept losing structure. So you keep kind of adjusting. But this is where the Fibonacci would be if this pullback went below this point, because now this would be the lowest point before this move happened. Okay. Those are how you find retracement levels. Find the lowest point before the impulse move up. Okay. So if I wanted to find where these pullbacks could come into play right now for the most recent ASTS move, you got the bottom there and go to the top that it currently has gone to right there. So now we're looking for 93. We'd look for 85 to find support, 76. And then there's the golden or the 786 Fibonacci right on this trend line. So we could see, depending on how much time it takes to get there, this golden Fibonacci could be the spot it lands at 76. If it comes down a little bit more aggressive, we could come down somewhere in here. Okay. That's how retracements work. That's how you can find your support levels using Fibonacci's. Grab the bottom of a move to the top of a move. Okay. If you wanted to zoom out, we can zoom out, but let me go over finding the target. Okay. So based on this bottom to this top, to how far the company pulled back, I could then tell you where are we going next. Okay. Get ready. It's crazy. I know. I don't know how it does it. It's all psychological. Grab the bottom point, grab the top point, and then grab the furthest pullback point. Okay. And we're going to get some targets. Ding, 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 ding. We hit our targets. We have more targets. There's always more targets. Okay. But the traditional targets will be these. Okay. And these are all trimming points. Now we see a trend line resistance, so therefore I don't believe these targets come into play. Can it? Absolutely. We could see squeezes, shorts covering, any of that stuff comes into play. Absolutely. But at least I don't want to take these little wins here when I can tell based on this and this and this that our target should at least be 116. Did everyone just see where I grabbed those points from? If not, I'm going to do another one just to, well, Colby, that worked out that time. Okay, well, let's just do another one. Okay, let's see. Here to the tallest point. Oops, not there, but I'll just circle back. Boom. Let me grab this one. Boom. And sure enough, here's our target. We've entered and we hit the 1618. Typically, this is where it's going to go. This is where the bigger moves can come into play, the 150 on this one. That's why I think 150 can happen, but at least this is where these targets come into play. So look for resistance. Sure enough, we found resistance. We got ourselves a diamond. You get out. Boom. Okay. So all I did, the bottom before the big move, the top of the big move, the pullback after the big move gives me these targets. These are the fib levels. Any questions? That is the simple version. Any more? Check out the Elliott Wave link I sent you. Read into it. Ask me questions, but counting waves is very hard because there's a lot that goes into them and there's a lot of opinions. And I don't like tons of analysts charting ways when there's too many opinions to it. I just want more of this straight answer. Okay. Now, if I wanted to, I could figure out where like small moves are happening too. So we could do like this one. So we grab this to this to this. We knew just from this move to this move that the top 618 Fibonacci was going to be 120. You could do it on all these charts. Look, here to pullback. Let's see where it tells us it's going to go. Boom to boom to boom. Where to hit? 618 Fibonacci, 97. Target acquired, right? It's very important. I would think that this is one of the easiest things as far as this simple version of me showing you how to find targets, okay? And find pullbacks. So if you wanted to, on all these companies, you can easily do this. You can zoom out, go to the weekly time frame, okay? Grab the retracement tool, grab the bottom of the very, before anything moves. Boom. There. So based on this top move, right, where can we look to find support levels based on the entire chart itself? This is where we would find support levels, okay? Same thing if we just backdate, what happened? Very bottom to this top, it found support right on the 0.5 Fibonacci. Well, now this top has moved, so we'd look for support maybe at this 50, 55, somewhere in this zone. This is where the next pullback could find support. So Fibonacci retracements are very important. You can look at a big picture, you can look at a small picture. Just realize the bigger picture you look at is for bigger moves, and the smaller picture, meaning when I just did that very small ASTS move, right? When I did this move here, when I measured this move, this is just to measure this move that we're currently in. But if I try to measure this bigger pullback of like this bigger picture here, then I can look for a bigger target of where we're going next. Yeah, so exactly. So let me pull that one up. And if you keep the it'll chart, it won't do it because if it says scanning, it means it can't figure out where to exactly draw the points from. And that's why, like, if the computer can't figure it out, like, what the heck am I going to do, right? So yeah, this is figuring out if this is using A to B to C, okay, right? A to B to C. If I drew the same thing, it's trying to find this. They're going to be pennies off, but it's the same thing. 107, like, the computer's more right than my hand drawing, I believe. So target 1 is the 113, which is 114, 113.73, 114.08, right? 121.80, 121.45, 133.95, 134.33. Okay, so yeah, this is what it's trying to base this target off of. If it can break through this, it will go there. If this keeps dropping down, the targets will continue to move lower. Okay, this pullback is trying to figure out 86.84 is currently, if I zoom in, watch, the lowest point it's currently at to the highest point it's currently at. So here is this, right? 86.35. 86.35 is your middle Fibonacci. Okay, 86.32. 84.14. 84.15. 89.45. 89.40. Okay, so it's the low, like this is the small pullback, right? If this price is right here, small pullback, right, to here. Okay, medium pullback, golden Fibonacci, big pullback, 786. Okay, that is basing off the lowest point to currently the highest point, because this is where the most recent move is. Before this happened, it probably told you these measurements. It probably gave you 87, 79, which it almost got down to, and then 73. Okay. So, yes, it is basing off of Fibonacci's. And if you leave these drawing points, that is where it's grabbing those points from. So, not all points are easy. Here's SoFi. Current targets could be 31, 33, and I agree with those targets. I think that stock could get there. But that's if you leave the drawings, it'll show you at least what it's doing, and if you think that is wrong, then don't use the target on that one. But it could help you get an idea of where targets are being pulled from. So for example, boom to boom to boom, it's predicting the targets will be about 120, 130, 160. I agree. I actually have somewhere, I have 180 as my target for this one, but I'm grabbing this bottom point. This is one I want to buy. I want to buy this stock really bad. 182, 131, 150, 182. So MP is a great one. I just want, we have a little bit of bearishness. This week could be a little bit bearish. We get a little bit buying opportunity on this support line. I'm interested. Let's go up and take advantage. Any more questions? It will be recorded. You can all circle back. Ask me questions later. No, so the targets one is not built into the Master Elite. It is a separate indicator. You might need to reclaim it in the WAP like you claimed it the first time. Then refresh your trading view. But it is chill investing targets. I did not combine it into it because this is not. I have a hard time making this big player in the game for us. Because you still want to understand how it's coming up with these calculations, and I don't want people thinking I shouldn't sell because it says 120 is the target. I want this to be used as a tool of understanding your risk to reward a little bit better. So right now I don't know where I'm going with this one, but I did want to make it available to you guys while I'm working on it, but it is a separate indicator. I'm not willing to put it on the master one just because it's not there yet until it's 100%. Once it's 100% and I feel confident, maybe I'll add it in there and then you could toggle it off and on. When you buy there, I know is notification on Discord when you have bought. Yeah, Discord notifications are when I actually make transactions. You will get notified. I think rare earths, guys, is a huge one. I think there's long term, you're going to have no issue. Short term, I don't think you're going to have very much issues. They've made it very clear it's a very important factor into the world. Like, so much so that they, like I said, they might be investing the 1.6 billion. I have no clue. I'm gonna have to read up on that. But rare earths buying opportunities is what we need to focus on. Energy buying opportunities you also need to focus on. Data centers. Okay, these three data centers kind of benefit from all of it. So that's, if you just want to go heavier into data centers, you can. These are going to, this fuels this. Need this to do this. So as long as we have these pumping, we got these pumping. Okay. So either way, but I think all three of those you're good for. If you just wanted to one of these, 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 like one of every one of these, and just held till 2030, I think you'll be up massive amounts. But yeah, if you learn the Fibonacci's and how to draw, which I think drawing them is very easy. You just need to grab the low, go to the high, and see where the pullback goes to. Grab here to here. So we can look at MP right now and see where the pullback should go to. Okay. Based on that day, which we did, we dropped down into this Fibonacci level. So then we found support in there. Okay. So, but if this is still the top, we could come down to 58. We could come down to 54 if it just did a hard drop in the next like 2-3 days. I think somewhere at the 55 range, there is a gap to fill. This is why I say you should switch to candles just to take a look at gaps. There is a gap. See this gap right here? Gaps. So the stock could come down right here to 55, and this is where I want to be buying, and anywhere in the 55s. I'm not going to try to pinch pennies, okay? But anywhere in the 55s, I think is a buying opportunity here, and that's when we are going to take advantage. I only use candles like this to find gaps. That's why when I said clover before we got out of it recently, the gap fill is right here. Look at this gap. Boom. So we have at least a gap fill to 350. The bottom of the gap at least is $3. You are still retesting the breakout trend line. Could we see a bounce here once macro whatever news is done being what it is? Absolutely, gap fill to 350. Of course, guys. My job, not my job, but my goal is with the Discord and videos and indicators and everything is just to educate you guys so you guys can also make these decisions and we can also as a group collaborate on callouts. I am not the end all be all to all answers. I won't ever have that mindset. That is me. I still talk with many different analysts to get ideas. I say this is my opinion. They say this is their opinion, and then I form a joint opinion. Whether or not they agree with the joint opinion is different, but I do not think my strategy is one way or the highway. My strategy is meant to try to simplify things when you are above, and I think ASTS kind of explains it again the best. Above the blue line, which I think I'm hiding the blue line right now, but there it is. Above the blue line, we buy diamonds on the daily. Below the blue, we do the weekly or monthly. Okay. And just listen to them. That's it. If it's on a neutral, don't do anything. Just stay neutral, neutral zone. Okay. So, but again, buy, nothing, trim. Buy, nothing, nothing, trim. Buy, trim, trim. Buy, trim, buy, trim, buy. Nothing, 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 trim. Okay. So, like, it's meant to just make things easy. If you want to implement things like I'm implementing things, I implement the wheel strategy into it. I see where like the middle of the Bollinger Band is on ONDS, and I'm like, I want to at least start a position there. ONDS has a lot going for it. The thing is with these small caps, the $1 billion market cap to the $5 billion market cap, all it takes is one contract for those guys to get to double their market cap. The government gives ONDS another $5 billion contract of some sort. They just doubled. Like, that's the hard part with these smaller ones and is the potential. Now ONDS is starting to get implemented into different ways of which like they're just going to be the next big one, it looks like the leader. So it's going to be a hard one to catch. So the only way to catch it is to just get in it the best you can and dollar cost in. But our goal is to just make it easy. If you want to just make it easy, find the companies you like. I do not believe in investing in a company you do not believe in long term and that you do not know anything about. I don't just trade blindly into a stock. I think that is how you lose the most. Blindly buying companies. Just because it says a diamond is good, and a diamond is good, but just because it gave a diamond on a stock, I'm doesn't mean I'm buying that stock, right? For example, we did Delo. It gave us a diamond. It gave us a diamond on a neutral. I don't buy neutrals. I don't believe in them, right? I can see the formation is bullish, can be bullish, okay? the weekly time frame, I don't love it. I don't love we're right here next to the resistance. I rather just wait till we break out of this $15, $16 range to confirm we are going higher to then get into it. Okay. But the goal is that this thing pretty much just charts it for you. And you guys can, that's why I removed this. You can quickly look at this and be like, yeah, we're at a resistance. I'll just wait till it breaks it. I'll miss out on $1 to confirm that we're not going down $7, right? Any questions come up, guys, please just send it in the Discord, send it in the help center, send me a direct message, send me in the WAP support chat, send me an email, whatever it may be. I will make a video on it. I will post it so others can learn from it. I will not share who personally shared the question. I just will answer the question. I'll just say, hey, questions have come up in the community on this topic, and then I'll go in and addressing this situation. If I don't know the answer, I will tell you I don't know the answer. I will not just make up an answer just to make it seem like I know everything. Again, I do not know everything. I know exactly what I've studied, learned from experience, from reading, from others. If you guys have something that you think would be good implementing in, I would love to know what you think, and then I would love to know how it works, and then I would love to figure out if it can be incorporated in. We will continue to build this to make all of us more and more wealthy. Okay. As far as the market overview goes, please, when you hit some targets, get to cash. I know it seems like we just can't go down. We can go down. If you remember how April felt last year, you will understand that we can go down. Even if a stock is considered undervalued, HIMS, it can go down. Can it go down as much? No. Okay. HIMS cannot go down as much as Palantir, as far as NVIDIA goes, as far as ONDS goes, ASTS, Rocket Lab. All these companies, yes, they can be considered undervalued in the long-term play, and that's perfectly fine, but get to some cash, please. I do not want, because it happens, and it's not just me, like, and if you guys were in our previous Discord, not my Discord, but in a previous Discord, I know when the market goes to bad, pop, poo poo, whatever you want to call it. I don't know. It's YouTube. I don't want to get it taken down. So when the market goes bad, people tend to go away from the community stuff. They tend to hide. And I don't want that for this community. And that's why I've been telling you guys during this moment, these past 2 weeks, is as you hit targets, take your wins. Because I don't want you to get caught off guard when we're at these all-time highs and you feel that every company is a winning company. When every company is winning, we are near the top. Okay. When you feel you can't pick wrong, we are near the top. Okay. And it's been that way. We can't pick wrong right now. Everything you buy has been trickling up in some sort of way. Whether might not be that day, but the next day it did, So take your win, build up some cash. Okay. I don't mean be 100% out of the market. I don't know if I will ever be 100% out of the market. Because some positions are worth writing out. But I still would like you guys to build up a cash position. Okay. Right now I'm sitting at 25%. I will not be holding SoFi if it goes down. I'm going to wait for earnings though. I'm not going to get out. They could blow it out. We could see a dip under 25 and then earnings pops us up. I'll wait for earnings. And I will not sell if it is at 18 and I can't get out fast enough. Like I won't do that. So, but have a game plan going into this week. Have a game plan. What is currently sitting as a winner? What currently has a big downside versus upside risk? Right? Like you need to look at that stuff. If the risk reward is not there anymore, you need to be looking to take your wins. Okay. ASTS is a perfect example. I can see this thing going to 150. It has the potential to get to 150. There's no doubt about it in my mind. But that is $30 up, and the downside is $50, $60. So I'm talking about $30. Well, it was $30 when it was 120. $30 upside to a nice $60 downside. I don't like 2-to-1 risk. I like 2-to-1 rewards. So that's what's making me get to more cash as things are hitting targets. ONDS, I have a target of 24. That is a double up. Downside, I would say, is somewhere like 9, maybe 8. So $4 versus $12 up. Like, I still like that risk reward. Um, and I think it can get there definitely by the end of the year. So I don't have a problem buying and doing CSPs on ONDS. That is why my risk reward on ONDS. And the reason I say that, if you take a look, let's do it. Let's pull out these Fibonacci's. Bottom to top. Boom. We basically hit this first target, but we still have here to go. 22. So I can still get $10 up. And if I grab this, pull down to here, 11, 10, and there's your golden, 884. So $9. That's my downside. I'm buying for like 10 something. I'm buying in this zone right here. That's why I'm okay doing it. I'm going to own the stock where the Fibonacci's tell me I should start to buy. So I'm good owning it there. If it goes down here, I'm just going to buy. I'm not going to do any CSPs. I'm just going to buy shares. And if we get down here, I'm definitely going to be buying some shares. And as long as we don't lose the $4, which I don't think that's happening, but if we don't lose the $4, this whole formation stays in play and this still remains our targets. So that's how my thought process works. Grab the Fibonacci's. If you can do CSPs and get into these buying zones where you would own the stock, I'm totally good with that. Because if it goes up without me, I'm still good with it. I will make money. Woohoo! Thanks, Damien. Thanks, guys. All right. No other questions. You know how to reach me. Shoot out more questions. But for now, guys, go enjoy the rest of your Sunday. Get ready for the market to open. It does not look like it's going to be a fun time, but we've had a great start and run to the year. We've got to expect some sort of pullbacks to come into play. But keep eyes on earnings. Any questions, shoot me a message. I appreciate you guys. I will see you guys in the Discord. Thanks.